Oh, we are back. What is going on, everybody? How was everybody's weekend? This is going to be a crazy week ahead. I hope everybody's excited. This is going to be nuts. Let's see. How is the video quality? I did pay this software more money so that I could have HD 1080p video. And if it doesn't work, that's going to be pretty annoying. But what's going on, everybody? Shout out to Mods. What's up, Geo? What's up, Vegas? Vegas, anyone else have their resignation letters already drafted? I mean, there we go. How's everybody doing? Everybody have a good weekend? All right, we have a lot of stuff to go over tonight. I'm going to shoot this link out to a bunch of people so we can see if we can get some guests on here too. We usually have a lot of people come in. Let's see. I think TMI might be able to pop on. Rogue will probably pop in. Let's see what happens. All righty. Ho, ho, ho. The video is legit, clear. Let's go. There we go. Finally. All I had to do was just tell them. It's so stupid. Like we all use like me and TMI use Restream, and like I paid for the normal one, and they're like, "Oh yeah, you have to give us another money, like a bunch of money per month in order to have like really good quality." It's like, then what's the point? STV, what's up, brother? TJ, not much, man. Get Keenan on here tonight. Keenan's pretty busy. Let's do a little Ortex update first. There's some stuff that I want to go over on Ortex with you guys that I haven't really heard a lot of people talk about. So utilization, we've been going over that. Let's see if there's something estimated. I hate when they make these the same color. So utilization is still on the way up. A little bit of a decrease, which doesn't make a whole lot of sense with the amount of shares that have gone out on loan. Tomorrow, we could see a really big boost in the utilization, which would be crazy. If we can get over 95 tomorrow and they continually try to short, which we know they're going to, we're going to get the utilization up to maybe 96, 7, 8. If we hit 99, you guys are going to see me start to freak out a little bit, because even though the last time that we hit utilization of like 98, 99, we were chilling there for a month, in order for the utilization to come down, they basically have to buy back a lot of the shares that they've shorted. So there would be a little tiny bit of covering going on. And the fact that we're headed into this week with a lot of options that are going to expire, calls and puts, we went over that in the Saturday's video, but then we head into September, which is a really, really strong gamma potential monthly expiration date. Everything's looking good for us right now. What about trade? Did I send him the link? No, but I could. I could do that. Hopefully we can get that happening again. That was pretty fun. Hi from the panhandle of Pensacola, Florida. Keep us in mind due to Hurricane Fred. Yeah, I heard about that. Ooh, Rhode Island. What's going on? Okay, so the next thing. Exchange reported short interest. So the all the way back to October 2020, we can see here that it was like 21 million. Back in early January, when we had that first run up, 44 million shares. Now, coming into the end of May, it jumped all the way up to 102 million. So when you think about the situation in January versus now, they've shorted the stock even more. They're just making this worse for themselves when it eventually squeezes. Because like I think Trey says this and TMI says it, is like shorting a stock just makes you a future buyer, because eventually you have to close that open position. Now, at the end of June, or like beginning of June, we saw that really big run up, and then we saw the stock start to come down, which could have meant that a little bit of covering happened. But again, they can spoof their covering. It doesn't really, and this is only reported data, so we don't necessarily know what's accurate. But the exchange reported short interest is going back up. So they're still shorting, and it's just getting like honestly, everybody is like, oh, I want the shorts to cover. But it's like, well, if they keep shorting, delaying this more, adding to their short positions, and the short interest keeps going up, the squeeze could potentially be more aggressive, higher, more volatile. You'll make more money when it eventually squeezes. So it brings us back to that concept of patience. Let's see. I know there's an AMC theater like kind of near where I go to the gym. It would be kind of far. It opens at 11. So I was thinking tomorrow or today I almost did it. I was just gonna run in and buy a bunch of stuff because I wouldn't have time to go like see a movie, but I might just buy a ticket and then show some support. But the short interest going up. The other thing that we have is we're going to talk about the liquidity drying up, which we know has been happening. That's something that we've been talking about for a while, and I want to get into. We also have that expected increase in margin calls. Deleveraging is starting. The institutions are repositioning their positions by deleveraging and going crazy into AMC over the last quarter. I'm waiting, and that's my story, says Phil. I think that's where we're all at right now. Looking forward to a great week ahead. Hey, it could be a real fun week, guys. It could be a real fun week. That Friday, like this past Friday, I think was the first Green Friday since the beginning of June, right after or towards the peak of that run up. Vex, you in CT? I am. I am in CT. Only half the apes in here have smashed the like button. Show some support. Thank you, Gio. Yeah, if you guys don't mind just hitting the like button. Those fudders over at CNBC just spreading misinformation. And their wife has a movie company or a streaming company, and that whole thing is just BS. No doubt we'll be over 95 utilization after last week's borrowing. C105, we definitely could be. I thought it was going to happen Friday, but it ended up not happening. Let's wait until a couple of more people get in here before we start going over this liquidity thing because it's really important. This is stuff that we've basically speculated has been happening. And over this last week, we've kind of seen the margin call, institutional sell-off, deleveraging, and the liquidity drying up, basically theories that we've had even before we saw that Goldman Sachs report. They're all coming together, which is very important. Now, we have a lot of other economic indicators that are basically telling us that things are bad. We don't know when it's basically going to pop off just with the whole market, but Q4 is a decent projection that a lot of people do have. Let's see. STD, what's up? What's up, Sean? Ernie, thank you so much for the super chat, man. Bought some $45. I'm guessing that's calls because Kenny G wants to pay some of my bills this week. Ernie, good luck, man. Thank you so much for the super. Utilization has dropped a tad. I think because of all the institutional buys creates more available shares to lend. David, that would be correct if the institutions recently bought those shares. They didn't. The effective date of all of those 13F filings is June 31st. So these buys happened Q2. They're long gone. But the important thing about a lot of those institutional buys is that they were holding those positions at the end of June. So what that means is that if they were holding before June, they held through the run up and back down. And they've still increased they had a net increase in their position. So they could have bought a bunch before June, sold off a little bit. Doesn't really matter. It would still show up as a net increase. And what that tells us is that they're kind of diamond handing their positions through this. So like the enemy of my enemy is my friend. So yeah, those institutions holding very good. A lot of people have been talking about how the institutions are lending shares. They're lending shares out. Oh no, relax. One, right now with the cost to borrow, it doesn't make that much sense for those institutions to start lending out shares. They're not going to make that much money because those rates that you see are yearly. The other thing is though, is that it's just like that options argument where people were saying, don't buy options. It's bad. It's hurting the squeeze. No, there's two sides to everything. We know from that BNY Mellon piece that I've shown you guys a couple of times that institutions, lenders of securities can recall those shares anytime they want with no explanation. All of a sudden, if BlackRock is loaning out a bunch of their shares or Vanguard, all they would have to do is just call them up and be like, give it back. That's it. And they would have to cover the shorts, return the shares. So then it's up to them. So it's not only up to the prime brokers, but if BlackRock's doing it too, and they're long on the stock, they might just be waiting for the right time to just let it fly. if they were lending out shares, which at this current time, it doesn't make a whole lot of sense. Ben Levine, thank you so much for the super. Hope Atticus is doing great. Oh snap, interesting week coming up. I'm trying to figure out the right entry points for different plays. TLT, UVXY, SPY, and all our favorite AMC. Ben, so for TLT, the way that you would get into TLT is it's going to be a little bit delayed. So there's going to be like a flashing indicator that says TLT is on, and you're going to know. It's going to be some policy action. It's going to be something happening with the Fed. What it could be is the debt ceiling in the downgrade in October. That's why I'm personally waiting on TLT. I YOLO'd on, so it was really small. I bought like one contract. It was super cheap, deep out of the money a couple of weeks ago just to mess around. And it didn't hit. That's the thing with TLT. It's like you either have to know exactly what you're looking for in terms of like Fed and policy, or you're just gambling. But UVXY, yeah, you would really have to, it's all timing. Like if you were to buy like contract, like again, nothing is financial advice. I'm just talking strategy here. I'm personally going to wait on those types of plays before I see confirmation, which I haven't seen yet. Like I have seen like confirmation that, okay, we're right, that the whole, like the market is really in a weird spot right now, but we haven't seen confirmation that the market's going to react yet. Let's see. What's my major in college? It's finance, but they don't really teach me all that much. The two classes that are actually important are that I've taken are fixed income and basic econ. Fixed income's good because it teaches you about the bonds. Like I think I talked about duration gap in my Saturday video, which is like it doesn't have to do with like the maturity of the bond. It's how a bond's price moves per basis point change in interest rates. So I wouldn't have known that if I hadn't taken that class, but most of the classes are just like mind-numbing, random how to calculate stuff. What's up, 007? Yeah, if you guys don't mind hitting that like button, it just helps us out. Went to an AMC theater today with the family. There you go, Trey Spider. Free Guy was funny, had a good time. There you go. BlackRock doesn't have to buy them back. That's not what I'm saying. BlackRock would recall the shares. So everybody talking about one of those forced share recalls, if BlackRock's lending the shares, they can do one of those recalls. The prime brokers can do one of those recalls. The only people who can't are the only people who can are people who have lent out securities. So like lenders of AMC, they're like, here, you can use this stock. We're going to pay me interest. And then we're basically going to you're going to cover your position at some point and give us the shares. AMC can't do one of those recalls. Awesome. I'm an information security major. Honestly, that's probably more useful. Let's see. All right. I think we can start talking about this liquidity issue right here. You know what we could do too? This is something I want to show you guys. So this ties into the whole market thing. And again, when anybody talks about the broad market, AMC is a very important part of that because the potential scale of this situation, like we saw it with the Say Vote, what those calculations had said, that the potential number of shares that's out there was like, I think it was between 1 and 5 billion were the calculations. Now there is a selection bias. It's not a random sample. So there's that 1%, probably a little bit more percent chance that the actual number of shares out there is outside of that 1 to 5 billion share range. But at the same time, it's probably pretty close. So if you have to cover all of those shares, that's going to be really expensive, especially as the stock starts going up. And you're going to have to sell off other positions. What happens then? Well, there's that SFT program where you can kind of mess around and delay a fire sale, but eventually those assets will get auctioned off at a lower price, which would reflect in the stock market. So this is what I want to show you guys. Here it is. Year to date. Okay. Ooh. Okay. So right here. So the blue line is the 200-day moving average. The red line is the 50. The S&P 500 has not touched this 200 in all of 2021. If it doesn't touch it in 2021, it'll be the 14th year since 1929 that it hasn't touched the 200-day moving average. Bank of America has come out and said that if it is going to hit this spot right here, which I don't know if you guys can see this, but The S&P closed at 445. The 200-day, or yeah, the 200-day is at 397. That's a drop and a half. So we already know that everybody's over leveraged, and that drop isn't crazy. But the thing is that since everybody's over leveraged, that drop is going to feel like a lot more if it touches that, because everybody is just levered up. They have so many loans out there that they're just going to fall below those margin requirements. Now, here's the other thing that we need to talk about, that plays into AMC right here. This is what we talked about in the video today. So, as noted by Bloomberg, liquidity is evaporating from the market as investors continue to chase stocks higher. You know who that is? Retail, because everybody's coming out and saying the market is fine and people are just going to keep buying, supplying the bids, wanting to buy in higher, because not a lot of people read this type of stuff like Fed notes or NSCC filings. They just don't read them. So put another way, the recovering economy is now drinking from a punch bowl that the stock market once had all to itself. So the punch bowl is like the liquidity, and there's now other things siphoning off from that liquidity. This is the chart right here. And when these bars right here go negative, it shows that liquidity is dropping. Now, when liquidity drops and you have this right here, the margin debt at almost 900 or 850 billion right now, which also includes institutions, by the way, if we look up higher, that's not great, because one, we're seeing institutions start to sell off of positions, and they're either, so here's the thing with this, with the margin debt chart, it's either like other large institutions covering their margin, lowering the amount of debt that they have or leverage, fine. Or they're getting margin called and then they have to close it out anyway. Either way, it's signal selling. And when you look at this chart, anytime that the red line really rips up, it's easier to see on this one. When actually, it's easier to see on this one. When the red line really rips up, it comes down, but it starts to come down before the market starts to sell off. So now this could just be a fake little sell off in the margin, or a decrease in the margin debt. But if it keeps going, I would expect the whole market start to come with it. Then we could see that test of the 200-day moving average. No, the whole liquidity situation is just going to dry out, and they're not going to be able to, one, enter into new short positions in AMC because their brokers are going to be like, what are you doing? And then two, they might have to cover existing short positions that their brokers have allowed to let get out of hand. Definitely want to see Free Guy. The preview is hilarious. There you go. Let's see. You guys were going nuts in the chat when I was going crazy over there. Let's see. And the picture was taken 3 hours before the first. Let's see. Hey guys, I'm new at this. Should I buy AMC at this point? I bought a little when it was at $2. Jose, you can do whatever you want. I would suggest just learning everything you can about the situation, because it like nobody should be able to tell you what you do with your money unless they're like a registered financial advisor that you're paying to give, like, to manage your money. You just shouldn't listen to some random person on YouTube, Twitter, Facebook, Reddit, LinkedIn. Like they're not, like, they shouldn't be able to influence your decision. What we're here to do is just provide information, and then you guys can make your decisions based on that information that we provide and any additional information that you then find after we say what we found. It's just a collective thing. It's just we have our platforms to just tell people what we think and what we find. If the market will crash, will crypto crash too? Most likely. And then, in my opinion, crypto is going to have a very aggressive sell-off, and then crypto could be a really good thing to buy on the dip, because we could see people just go nuts into crypto again. STV, what are your thoughts on computer share for GameStop? And do you think a share on there could contribute to the infinity pool? I would have to take a deeper look into that. I heard that AMC will squeeze in after hours. Can I have some feedback? Joel, one, there's probably not enough volume in the after hours for them to cover all of those shares. Like right now, This like one, there's so many shares that they would have to cover it, or yeah, buy back, like cover and meaning buy back, that it would most likely take a couple of days, weeks, depending on how many shares that they need to actually cover. But when you look at after hours volume, it's not enough. There's not enough people willing to sell in that period to cover like the short positions. And even if it started in after hours, well, then the next day there's going to be people getting margin call, margin call, margin call. So then they're going to have to start to cover. AMC is going to take days at least to fully squeeze. William, it's entirely possible. It could take weeks. It could take months. We don't know how this is going to really play out. It could, like, we could be in the middle sort of like a squeeze right now where we rip up, we come back down with new shorts. So basically, the beginning shorts really cover their positions, and then there's new shorts coming in on that way up and pushing it down. But then they have to cover their positions too once we rip up again. When can I stop working? Most likely once you get your money and you can afford not to work. Some guy was talking about the squeeze happening pre-market. He doesn't know what he's talking about. I mean, don't tell like some people just don't know. Next 3 weeks are going to be dope. Yeah, they are. What are the chances Jim Chanos gets in trouble for that tweet? 50-50. SCV, is rehypothecation still a thing? I heard there was a filing in June that introduced tracing for borrowed shares. Yeah, I think that was 005, or it was part of 005. So rehypothecation there's like a couple of different ways. One of them is like posting your client's assets as collateral, so they're not your assets. So it's like, say you went to a large institution and you had like I don't know, $50 million in an investment portfolio there. If they were not sufficiently capitalized, like enough to maintain their margin requirements, it's possible that they could put up your own assets as collateral. They're not supposed to do it, but it has happened. The other way is the same share gets shorted multiple times through that one process where like the institution, or like I get my shares loaned out, then a hedge fund shorts them, sells them to somebody else, and their broker loans them out to another institution, and then they sell them, and then me and somebody else own the same 100 share block, but like they still own like a voting right in the company. I don't understand why they're reporting their shorts if they don't legally have to. Why would they be intentionally letting Ortex know their short positions? They're letting Ortex know probably the minimum amount that they have to in order to not get fined. Think about a speeding ticket. You know how much you can speed in general without getting a ticket. Like if you saw a cop that's basically has a radar, you know that maybe if you're 10 miles an hour over the speed limit, it's not worth it for them to come out and chase you. It's just not. It puts everybody at risk. They don't want to do it. So they know how much they like need to report in order to not get fined. And even when the fines do come, it's less than $1 million every single time, so they don't care. What? Chris, is that a new account name? That's kind of funny. 007 wants to start his own business. There you go. 007, what are you going to start? It can start the squeeze in the after hours and have a huge gap up. 100%. Jim, yeah, it can definitely start the squeeze. Like if they're going to pump in buying volume in the after hours, yeah, we'll go up because they're going to basically, there's going to be like a certain amount of shares that like want to get sold. But if you're trying to sell in the after hours and you see that just these massive buying orders come in, you're going to step up your ask and it's just going to keep going because the buyers are going to keep stepping up their bid because it's basically going to be computers at that point that are getting flipped to buy, and they're like, just cover the position, cover this amount at this time, and it's just going to do whatever it needs to do. Is it illegal for BlackRock to lend shares when the borrower shorts take the buy side of that trade, doubling their long position? It wouldn't matter. They would just be buying. No, it wouldn't. I mean, no, it's not illegal, but it shouldn't be illegal, but it just depends. Like if they're gonna buy a crazy amount of shares, most likely they're making like a deal with another institution. Like they probably do it in the dark pool in order to get all of those shares. CT, thank you so much for the super. Shout out to all you guys sending in those supers. It means a lot. You guys don't have to do that. Like without you guys, we wouldn't be able to keep doing this. So thank you so much. CT says, what is the rule that set forth the DTC loaning defaulting members so they don't liquidate, fire sale in the market? Do you recall? I can't remember the number. It was NSCC 803 mentioned it and NSCC 010 CT. Those were the two rules. They're both like, I think 300 pages long. Ooh, Jackson Hunter in the chat. What's up, Jackson? I'm going to send you a link right now, buddy. Let's see what happens here. Boom. Jackson, I just sent you a link. If you want to pop in, you are always welcome to hop on the stream. AMC squeeze first, then GME. It's possible. Or GameStop could squeeze first, then AMC. Or market sells off first. Then we see AMC come down. More shorts come in. Their algos switch to buy. Then we just go up, but from a lower level with more shorts, which is kind of what we're seeing right now. Let's see. Totally not the FBI says, imagine how many hundreds of millions, if not billions of dollars are going to leave the market. Wonder if because of that, it would make it more beneficial to make this Tesla as I'm not really sure what you're saying there, FBI. One triggers another. It definitely could. Nice milk. It's Liquid IV, actually. I've been drinking Liquid IV every day for like a year now. Let's see. What else do we have? We have repos. Market collapse triggers both, not right away. This is what I want to make sure everybody like kind of gets, that if the market starts to sell off, it is entirely possible that AMC goes with it or like off the bat. Because think about if you're a short, if the market's starting to go down, you can make money off of a short, especially on AMC, depending on what the reason for the sell-off is. If it's this new wave coming through, then potentially they're just going to short it more. But again, you have to realize how like algorithms rule the market. So if the algorithms short at, I don't know, 33, it goes to 25, they're going to be like, okay, cool, profit, switch to buy. And then they start covering their shorts. Now, if all of their algos on these really big short positions start doing that, then that's could be a trigger, but we could see a big sell-off first. It would be like the final boss of sell-offs, like the last retail shakeout. Counselor Diamond Hands, thank you so much for the super chat, man. LFG, awesome, man. Thank you so much. That was not supposed to happen. Yukon, I think you're just up the street. Yeah, I'll be back in my apartment next weekend. You guys will get a new background starting next week. The background will probably be like my kitchen. Walmart's looking to hire a crypto expert. Interesting. The final test. Yeah, it really could be. I need AMC's share price to reach 1,000. I'll hold longer, but that alone would be okay. Honestly, Gavin, yeah, everybody really needs to kind of like think in their own mind what is going to be their own personal sale, like when they want to get out. Let's just say you have a boatload of shares and you got in super low. If you need to get out at 100, okay, cool. Like I don't care. Nobody cares. You shouldn't care when other people get out. It's like, okay, if you need to hold for longer, then you will. If you don't need to, then it's up to you. Nobody can tell you what to do with your money. King Omar, thank you so much for the super. Make your own Liquid IV cheaper that way. I saved a ton doing that. So that's the reason why I always wanted a Liquid IV sponsorship, because I drink so much of it. I was like, this is expensive. Also, you guys are going nuts with the super chats. Thank you guys so much. You guys don't need to do that. Thank you. Lucas Ford, thank you so much for the super. Do you expect volume to increase in the coming weeks due to summer coming to an end? It seemed like summer caused some volume exhaustion. Lucas, it's very possible that we see some volume come back in. That typically does happen. But at the same time, you got to remember the volume that we saw in June was huge when we saw those run ups. So it really just depends on what we really have going on with the stock. But thank you so much for those supers. Buddy S, thank you, man. As always, thanks for what you do, buddy. I will get him. I will get another coffee. Thank you so much, man. Is there a catalyst that would stall the squeeze? Well, there might have already been one. This goes back to those share offerings because a lot of people keep asking AMC to offer a dividend. The reason why people want AMC to offer a dividend is one, you'd get a dividend payment. You probably have a significant position in AMC and you get to make a little bit of like passive income off of your investment. The second is that it's a really good way to expose shares that aren't supposed to be out there. Like AMC has a legal number of how many shares are supposed to be out there, and they would only issue dividends based on that amount. And that would expose the shares that are out there that wouldn't necessarily be out there. But for AMC, I think so the reason why that may have stalled was because AMC has a significant amount of debt right now, and a company is not going to offer a dividend if they have a significant amount of debt. So if AMC was able to offer those shares in 2022, then maybe we would have seen them raise more money, pay off their debt sooner, and then they would offer us a dividend. But another thing is that if you paid attention really closely to Adam Aron's interview, with Trey, maybe not with Trey, but his earnings call, was that he said that he would be able to pay off a significant portion of their debt in a year, and they would rethink that dividend question. So that's pretty interesting. So that also brings us down to patience. And the second thing is that when we compare previous squeezes, I like to say Volkswagen is more similar to AMC and Overstock is more similar to GameStop. The reason is for like that squeeze catalyst. For Overstock, it was that crypto dividend. That's what GameStop seems to be working on right now. And most likely the announcement could come during their next earnings report. I don't actually know when that is, but that could be a good catalyst for both AMC and GameStop to squeeze. For AMC, it looks like the catalyst is going to be like the disclosure of ownership. Like there could eventually be a disclosure that retail owns this amount, institutions own this amount, insiders own this amount. There's not supposed to be this many shares out there. Squeeze. That is what I kind of see for AMC. It's that disclosure of ownership part. And for GameStop, it's more of that crypto dividend. Let's see. We need to watch a ton more movies in theaters. I am Stevie. I agree. King Omar, thank you so much for the super. I love all you beautiful people. Remember why you hold, but also give, give, give. I want to hear about and see acts of kindness worldwide. Same, man. A lot of people have really made a lot of claims on what they would like to do with their squeeze money, and I really hope a lot of people follow through because that would be a really good thing to do. STV, are you getting recognized at school yet? I'm not at school. I go next week, but I really don't think so. I've never gotten recognized, and I don't think I will. Because, like, I'm just a silly YouTuber who talks about a movie theater stock. Download AMC Home on demand last night. No AMC movie theaters in my city. Okay, Mazzari, that's an awesome idea. If you guys did not know, if you do not have an AMC near you, AMC has a feature. It's like their own streaming service called AMC On Demand, where you can basically rent or stream shows and movies at home. So if you don't have an AMC near you and you want to support the company, you could just do that if you wanted to. Oh, Dan says, once the squeeze starts, can it stall? And by what catalyst? Massive selling all at once. Dan, I mean, like I hate to say this, but like if one of these brokers or the clearinghouses can't handle it and they cut off the buy buttons again, then like, yeah, that would like delay it, but I don't really foresee that happening. So I think once it gets going, it's going to go. Send in the apes. There we go. AMC should take over the streaming market. Sean, they could, but at the same time, if you remember in the earnings call, it like the streaming business wasn't really like hurting them. It was hurting the production theaters. They were like, yeah, we want to show these movies more in theaters because it helps us more. Dylan says, I'm gonna watch Margin Call tonight. That's a good movie. And tomorrow you'll randomly get recognized at Target or something. Yeah, that would be funny. I wish Adam Aaron asked Disney if we could watch The Mandalorian in theaters. I would pay extra. We also have sporting events. We have UFC fights. We have concerts coming in. I think here's what I think AMC should do. You guys ready? This is how I see AMC winning, only if it's cost effective. The way AMC wins is this. It just in terms of their business. When you think about going to the movie, what you also think about is like a parent's night out or like middle school kids or like high school dates going to the movies. But you think of dinner in a movie, typically. You go somewhere, then you go to a movie, and then you go home. The way to really win is to incorporate that all in-house. So what they could do is have a bar in there. They could have like sporting events like we've seen, shows, all sorts of stuff like that, because their concessions, like the revenue from concessions went way up. So if they can get people onto their property just to go and hang out and spend money at the bar or spend money at a restaurant, maybe that's how they win. You see what I'm saying? You don't necessarily have to go to a movie at an AMC theater. You just have to go to the theater. So it's incorporating like everybody's night out all in one spot. They do that in Portland. It's pretty dope. Interesting. Yeah. So the AMC near me doesn't do that. But if they could do that all across the board, maybe at their highest converting theaters, that would be really cool. They have bars in some AMC theaters. Exactly. But they would have to do it in a lot of them, mainly in the areas with high traffic. Do you think AMC will drop in price due to all the liquidations? Mateus, no. As we've seen, a lot of institutions have piled into AMC in Q3. Most likely, a lot of institutions are going to continue to buy more AMC. Sorry. They piled in Q2. I'm thinking like market beat right now. They piled in Q2, so I'm thinking that they're also going to start buying more in Q3 because it's at a lower price. They're going to want to average down. They still understand the short squeeze thesis, and they're going to want in on it because we've seen a lot of these institutions hold from $8 to high 70s, and they still have their position now at $33.50 a share. Let's see. Restaurants are not cheap to run. Yeah, that's why I said if it's cost effective. That would be a very smart thing for them to do. Geo says, stop throwing out numbers. You don't know for sure what price it will go to. Nobody does. Nobody has any idea. Geo is right. Yeah. Lots of new investors are young. College bros show up in Matt. I mean, I don't know. Have you heard anything about hedge funds possibly covering their shorts in the dark pool? And is that even possible? I mean, yeah, it would be, but it would also get reflected in the price because they still follow NBBO. Like the NBBO, the national best bid and offer applies to the exchange and on the dark pool. And we've also seen that even on the over-the-counter markets. And okay, so here's let me see if I can pull that up for you guys. I don't remember where that is. 30. Okay, so the number is 30%. This 30% number says this is basically the difference in price that we could see from the NBBO, the national best bid and offer, to a trade executed on an off-exchange venue. But that 30% number is for like OTC penny BS stocks. The number that it would be for AMC, I think, is around it's between 20 and 24. And that's on those weird OTC. And that's really due to like liquidity and like how many trades are transacting on that one exchange. So even if people thought it was trading that high, it's not because of how the structure is. Now, then the argument is, well, nobody plays by the rules, but then you'd be able to see it. Like nobody's presented evidence where you can actually see that the price is higher right now. Oh, what's up, Pam? How you doing? Some theaters in Virginia sell alcohol and food. Interesting. That would be awesome if they could do that everywhere. AMC and Liquid IV partnership. Oh, we would squeeze right away. Let's see. What if GME leased a space inside AMC to sell their products? They could, but at the same time, we've also seen Adam Aron say he's working on basically getting in touch with GameStop. Now, the thing about that was when he said that they were getting in touch with GameStop in the first part of the earnings call, he was like, you could tell he was kind of smirking. He was like, we're on it. He obviously knows why we're asking that. He's not stupid. But then the second time he talked about it, he said there have been no conversations. So it seems like somebody said something to him and was like, no, you're not supposed to give any hints that we're like actually in talks yet. Like he can just come out, like if Kramer asked him a question, that dummy, who's I'm pretty sure is now short on AMC, which good luck with that. I don't think he would have to answer honestly. I don't think he would. He's not like in a trial. Like he doesn't have to he's not facing the threat of perjury. He could just be like, no, we're not talking to him. And then he is. So who knows? But even if they're on the off chance that they're not talking to the people at GameStop right now, they're going to attempt to in the future, which I think would be a good thing. Let's see. No dates, no prices, 100%. Also, here's the thing. When I talk about that September 1st date for the uptick in margin calls on OTC derivatives, that does not mean at all that I'm saying that the squeeze will happen on September 1st at all. And when you talk about a margin call, that doesn't mean forced liquidations at all. All it means is that you're going to need to supply more capital or collateral in order to maintain your position. So again, we're just witnessing this slow bleed out of liquidity, and that Marshallian K is telling us that that's already happening. We're seeing the deleveraging from the institutions. We're seeing the margin debt start to come down. All these different indicators are pointing to the institutions are making moves behind the scenes, telling us that the market will keep going up. But in reality, they're just dumping on retail so they can get out early, which is what happens every time. Retail is usually the last ones in and the last ones out, because they're not going to want to buy the dip. And if no retail investors are trying to buy the dip, then they have nobody to really sell these massive positions to. They're not going to sell to other institutions because they have the same idea. What if the squeeze happens tomorrow? Then the squeeze happens tomorrow. But who knows? Nobody knows when it's going to happen. Cypher says, what up, Vix? Hope your weekend was good. I hope your weekend was good too. 007 says, I honestly think AMC should steer clear of trying to include a full service restaurant in their business model, offer drinks, a bar, but that's as far as they should go. Yeah, I think I agree with that. Let's see. All right. Do it in licensing play. Interesting. AMC is going to accept Bitcoin. That is correct. They can say a lot without being legally culpable, in my opinion. Yep. This might be an exciting week, but who knows? We hold and wait patiently for the market event of a lifetime. Dadbron, I agree. We've gone over this a lot. It's a big concept of patience that we have right now. Like, patience is a very important thing to keep in mind because, one, this could potentially be the play of a lifetime that we're all witnessing right now. And when you think about the story of The Big Short, I think it took them 2 years in order for it to pay off. And they were bleeding out money until they hit it big. And they knew they were right the entire time, but the market wasn't reflecting that. They knew that they were right, but the market wasn't reflecting it. That's kind of the situation that we're in right now. We know that the shorts have to cover. We have a very solid understanding that they've overshorted not only AMC and GameStop, but a lot of other companies as well. That it's just going to take some time to play out before eventually they have to cover these open positions, because that's how short positions work. Eventually they have to buy them back. SCB, in your opinion, how can we identify we hit the peak of the squeeze? We are not really going to know. We can look at Ortex, but it's going to be delayed and it's not going to be completely accurate. You really have to have your own plan going in. CT, thank you so much for the super. I really, really appreciate it. SEV, can you promote hashtag ModSpods space on Twitter after the live for Transparency Project? Absolutely. Yeah, you guys got to let me know when you're doing that space and I will pop in. Ryan, what's going on, man? Let's see. AMC buys Bitcoin. AMC will profit for sure. They could. The thing is, though, is that if the market sells off, crypto is most likely going to sell off. So they could lose a little bit of money. But again, it's just revenue. Crypto is most likely going to come back eventually. It's like a very high performing asset class. So we're just going to have to wait and see. Eventually, AMC will make a boatload of money on the crypto that they're going to be taking in. Check out public investing app, no payment for order flow. Yeah, I could definitely check that out. Let's see. All right. So so here's a little bit of a brief recap of what we've covered so far. We know that everybody's really over leveraged. We know that people are starting to liquidate. We know that everything's starting to come together. We're just waiting for the market to react to everything that we are seeing. That's really where we're at right now. We've seen the confirmation and now we're just waiting. Pam, thank you so much for that big super chat. I really, really appreciate it. Thank you so much, Pam. Pam says, I appreciate you, STV. I'm holding with you all. Thanks for holding. Patience is the key, guys. Pam knows a lot about the patience. Pam, I think, is the earliest AMC shareholder that I may know. There might be one or two people that have bought AMC before Pam, but Pam is a real OG ape. Pam was an ape before we were even apes. So thank you so much, Pam. Why would anyone use BTC at AMC? It's an appreciating asset. Maybe some people just have a bunch of Bitcoin and they want to spend it. Let's see. Yeah. Also, if you guys don't mind, just dropping a like on the video. It just helps us out with the algorithm. We've seen that like CNBC, all those fudders over there for some reason are like ranking at the top of YouTube search for AMC. And basically every single one of their videos is just them spreading just this most BS FUD about everything. Like anything, most of the things that they say are like verifiably false. So if you're a new ape and you're searching, oh, I want to learn about AMC a little bit more on YouTube, and you see these CNBC things start to pop up and they're just spreading FUD and they're just spewing misinformation, it's like, oh, well, maybe I'm not going to take a look into this and everybody seems crazy. No, that's not what's going on. It's just these people are idiots. Let's see. How about a partnership of AMC and GameStop with Visa? They could. I don't really see how they would do that. Pam is the first person I saw in the YouTube chats very early on. Yeah, Pam's an OG. Shout out to Pam. I think AMC and GME will be the last two and the hardest hitting of the squeezes. Honestly, they could be. The thing is that a lot of people are like really, really complaining about the manipulation that we are seeing right now. But the fact is, if we were not seeing this type of manipulation, it wouldn't be possible for us to have these types of squeeze plays. It just wouldn't. They wouldn't be able to overshort these stocks, and retail investors wouldn't have been able to like research what's going on and take the other side of the trade and kind of like almost trap these shorts. That's kind of like the end result that retail has done. Like they've just said, oh, they've overshorted this stock. We are going to buy it now because eventually they're going to have to cover their shorts. But so many people did it that it's going to be so increasingly difficult for them to cover those shorts that they're trapped at this point. 007, thank you so much for the super. Shout out to West Virginian crypto miner holding sits 2016. Okay. WVCM is now the oldest AMC shareholder that I know. If anybody's holding before that, that's nuts. So shout out to you guys. Do you think it is likely the squeeze starts after September 1st with the new margin requirement? I honestly, I think after I think 010 and 803 are in play right now. I don't know if they're like legally enforceable. There's like some weird loophole with that, but once they are, and once also we got to see Bank of America take some of that money off of their shelf offering, because Bank of America, we know, has a crazy amount of derivative exposure along with Citi, Goldman, and JP Morgan. And we know that on September 1st that those margin calls are going to start increasing. Now that's just going to keep draining liquidity from a lot of these institutions, and it could take longer. Like the fact that we would see the margin calls and this liquidity drain doesn't mean that it's going to happen right away. It's just, okay, game on. You're just going to suck out all of the money until they can't afford to maintain these margin requirements and pay those borrow fee rates. Hey, SCV, who are you eyeing for a potential first round pick in your fantasy football league with TMI? Ooh, I don't know yet. Probably going to have to take a running back or a good receiver. That's typically the route I pick. But I'd have to look. I haven't followed football in a while. It's going to be like just willy-nilly picking people. Yeah, payment Fidelity does use payment for order flow for options 007, but not for their stock trades, but a lot of their orders get routed to Citadel regardless. But on Fidelity, you also have the option to direct your order to the exchange. I think it's Active Trader Pro is what it's called. Do you believe AMC will squeeze before the new year? That's an interesting question. Nobody knows. It could squeeze tomorrow. It could squeeze 6 months from now. We don't know. There has to be like a catalyst for it to happen. We're setting up really good on the charts for a move up, but at the same time, nobody really knows if it's going to be like the squeeze. Nobody knows. All we know is that they've really added to their shorts. We know that they're going to have to buy those shorts back at some point, and that pushes the share price of the stock up. It's just a matter of when, which we don't know, and how high it could go, which we also don't know. Robinhood, no more payment for order flow. I think that's cap. Venus, thank you so much for the super. Can't we just all set 100K stop loss and scare the blank out of hedgies and market makers while also avoiding paper hands? Set it and forget it. You could, but at the same time, what if it doesn't get there? Then you're screwed. But thank you for the super. I think everybody just needs to come up with their own individual plan. And once you have that plan, if you can execute your plan and make a bunch of money off of this trade, then you win. Nipol, thank you so much for the super. I sent some DD to your Twitter DM. Great vids. Thank you so much. Natsuka, I think that's how you would pronounce your name. Sorry if I'm not pronouncing it right, but thank you so much for the super chat. Thanks for keeping me and my son during dinner and all your hard work. P.S. My son said to tell the hedgies to Ligma. That's funny. Thank you guys so much for the supers. You're right. It's not quantitative. Just wait. Because I don't think anyone has any idea of what this can go to if you hodl. In my opinion, Alexander, I agree. The thing is that there's probably, in my opinion, no other stock out there right now that could potentially offer the same return that AMC or GameStop can. So that's why I'm focusing in on this so much, is because there's nothing really else out there to me that screams life-changing trade. Now, there could be a couple of trades that you could take when the market comes down that could be crazy. But I still see AMC and GameStop as one of the most bullish plays in the market right now. With all the information that we have, anybody that comes out and is just like, oh no, it's not going to happen, or oh no, AMC is a bad company. All you really have to say to them, and they will answer it all the same way every single time. So if anybody's running into this problem where people are like trying to talk down on your AMC position, one, screw them for trying to tell you what to do with your money. And two, all you have to say, this has worked every time, is have you done the research? Have you looked into it? 99% of the time, they're just going to be like, no, it's a movie theater company and streaming's taking over. And you're just going to be like, oh, you obviously didn't watch the earnings call, read the earnings report, or listen to anything that the CEO has said. And that's really just the bare minimum. That's fundamentals of the company. That doesn't even take into account the short squeeze play. Oh, so that was my rant right there. It's all in the FTDs. It could be. They circulate around. If it's all based on margin requirements, doesn't that mean they only need to keep covering just enough to meet those requirements, then short it back down and rinse and repeat for years? Paul, not really, because if they don't meet the margin requirements, they're not going to be able to enter into new short positions. Hold on. Hold up. Hold up. Let's see. Yeah. Yeah, Nipple. I'm pretty sure we know that. Oh, interesting. I'm gonna have to take a deeper look into that. It has to do with the Warner Brothers streaming situation. That's interesting. Yeah, no, I just read that. Best rant ever. Oh, cool. I should rant more for you guys. I can go off on crazy rants. That's exactly what I shared with my little brother a few hours ago. Nice. September 1st, bloodbath. On us, new S&P 500. I'm not sure what you're trying to say there, Jamie. Lance, thank you so much for the super. Hey, been researching options and other possible squeeze plays to get a grasp. Oh, check out Nokia calls January 22nd compared to any other month. Yeah, there's probably a crazy high open interest. Here's the thing about the other squeeze plays. Um, the thing that makes AMC and GameStop, mainly AMC, different than anything else is it has a crazy community. Like I haven't seen any other stock with the potential to have retail own like all of it, all of the shares, or even more because they've overshorted it and they've created these either counterfeit shares, naked short positions that are just floating out there that we can basically see in the failure to delivers. So there's nothing else that really screams that right now. We know GameStop was overshorted from that 140% number. But AMC is a little bit different because they have that retail and in institutional ownership aspect to it. Lance says he's not in any Nokia. Yeah, there you go. What do you think? Uh, if you put you can do whatever you want, Dan. You can do whatever you want. What did Chanos tweet? Apparently, they were talking about something, but apparently he has like another Twitter account that like he wouldn't have, and it just screams market manipulation. Now, the SEC, I believe, 50-50 chance he gets a penalty for that. But his penalty, probably just going to be a little fine, which who knows? The Gary Gensler is looking to crack down, which is very good. We're seeing those steps kind of put into place. And again, I think there was that Freedom of Information Act request where we basically just saw exactly what, I mean, I hate to say this, I've been saying it for the past couple of weeks, that even if I believe that the SEC is investigating this right now, but the SEC just said in that Freedom of Information Act release that if we have an ongoing investigation, we will not release that information to the public. Okay, so don't bother the SEC. Because they're not going to tell you if they're investigating. They're just not going to tell you. Ella B says, not a dead cat. 100% Ella. Dan says, if I try to sell a few shares for $1,000 tomorrow, nothing will happen. You will not get your order filled unless we squeeze tomorrow, which who knows, but nobody knows when we're going to squeeze. GME paved the way, so it made new apes more confident to enter AMC cheaper when the DD overlapped. So a lot more got in early on AMC and keep holding. Yeah, it's very possible. It really depends on what company was actually overshorted. We know GameStop. We have a very strong speculation on AMC. And as I showed you guys earlier, let's go back to this chart right here. That the exchange reported short interest when we compare it to January, which again, there are more shares in circulation. So you have to take that into account. There's more shares that they can get their hands on to short. But January 15th, there were 44,671,962 shares shorted. Now, right now, from the exchange, the most recent one, Friday, July 30th, there were 85,845,513. So that's double. Did Jackson leave? Yeah, Jackson was busy right now. I think he was just popping in to say hi. Let's see. I think we're gonna get TMI in here for power half hour too. That guy loves to come in and cause trouble. I'm just kidding. Just keep buying and holding. Hedgies are ducked. Marshall Perry. I mean, they are really at this point. Okay, thanks. Just thought if they were buying high on the ATS, Dan, there's no evidence to suggest that they would be buying on those at those crazy high levels. They follow the NBBO, and even on the OTC for the NBBO. I've shown you guys this in videos in the past. The highest percent difference for a stock to trade at those from the NBBO is 30%. And that's not even for like AMC. Like AMC wouldn't fall under that category. That would be AMC's would be around, I think it's 20 to 24%. It's in that range. So even then, it couldn't be trading that high. Oh, what's up, Fuzzy? STV, incredibly important question. If I lend out my 1,000 shares to someone and they hold as well, isn't that the easiest way to create synthetic shares? They're not really synthetic, like they're real shares. They're just the same shares being sold short and the same people own them. So technically they're like synthetic. But it's just the same share getting owned by multiple people. It's like me promising to sell a car to 10 different people and I collect the money for all of them and then I split the title 10 ways. Like they all think they own the car, which they technically do. But there's only really one car. Tell TMI to check his Patreon messages. I will. I'll also tell him to check his OnlyFans messages too. Last time inflation was above 5 for 3 months in a row. The market crashed the month after. This month was the third month above 5 inflation. What do you think about that? Very possible. It has to do with the Fed, though. The Fed, they're going to have to raise rates or taper the buying of securities, which could come sooner than expected. We also have that. There's just so many things like the debt ceiling situation. We could get our credit rating downgraded and we could then go down to that 200-day moving average, but we would have to cross the 50 first. But the 200-day moving average is about 11, probably 12 to 15, probably 12% away now than so that'd be a 12% drop, but we know everybody's over leveraged. So if we saw a 12% drop in the S&P, the components of the S&P would fall even more than that typically. Like tech would get hammered, growth would get screwed, value would probably be the winner, but it would all still come down and even out. And these institutions with positions in these stocks are going to have to get forced out because they're leveraged up on them. We got to get a trending hashtag for tomorrow. We do have to do that. Also, guys, let's see. If you guys want to follow me on Instagram, that is my newest platform. So I would really appreciate it if you guys go and gave me a follow on there. Anybody that follows me right now on Instagram, I will follow you guys back. Let's see. Dip before the rip, very possible. Hashtag for tomorrow, still not a penny. Ooh, that's a real good one. Let's see. If you consider what? Weekends are so boring, excited for the casino? Me too. Me too. Wait, I don't understand. Is how institutions are buying mad shares and apes keep buying it, but utilization barely goes up. Where are these shares coming from? Synthetic. Okay. So what you have to realize is that those shares that were bought in Q2. So they were bought before the end of June. So we wouldn't see the buying volume now. We would have seen them in Q2. In addition, the utilization just has to do with the amount of shares that institutions are willing to lend versus the amount of shares that have already been loaned out. So it just depends on the basket of shares. Like there could be more shares that are able to be loaned out now. And the reason for that is that there were a lot of new retail investors that came in June, and they may not know to turn off their share lending. And if they don't know to turn off their share lending, then those shares can then be loaned out. And most likely we saw a massive increase in the amount of shares that institutions were willing to lend out. So we could see like a very similar amount of shares on loan and like short interest in terms of the shares actually shorted, but the utilization wouldn't be as high. The reason for that is that there's more shares that are available to get loaned. I'm so glad I got work in weekends just to get out of boredom. Yeah, the weekends are a little slow. Chris says people are talking about pennies. Uh-oh. Possible that they might squeeze it in after hours? No. Omar, there wouldn't be enough buying volume or volume in general to squeeze it in after hours or pre-market. Any news on GME NFTs? Not yet. I would guess that they would talk about that in their next earnings report. That's most likely going to happen. One fast duster, turn the share lending off. There you go. Yeah, the thing about share lending is that if you have share lending turned on, you're literally allowing the like other people to take a position against your long position. So it hurts you and it floods the market with supply and then it hurts your position. It's basically diluting your position and they can push it down. The Ortex numbers are not hard numbers, but a general trend. Yes, Libby. What I like to say is that the Ortex numbers are a very, very conservative baseline of what the short interest could potentially be. So 19%, it's most likely a lot higher because one, Ortex is only getting 85% of the data. Two, we know that they don't really have to report all of their short interest just due to the FINRA guidelines. Three, the fines for not reporting are under $1 million every single time. So we don't really know. Like we're never going to really know what the true short interest is. Could AMC sell NFTs to pay off debt instead of selling shares? They honestly could. I don't know if they would do that though. Do you know if I can turn off share lending? Evolutionary flow. I do not know what your broker is. VIX GME squeeze happened in pre-market. Take a look. I mean, it was during the market hours too, so it didn't happen and then come down in the pre-market. Like GameStop was like a week-long event, but that really wasn't the full squeeze because remember, we had that buying button turned off, so that wasn't the full squeeze. It probably would have gone way higher that day. The volume on AMC that day was 1.2 billion before they cut it off. Like that's crazy numbers. With all the new SEC rules being implemented, can something like this really ever happen again? It might be the play of our lives. Robert, it's very possible that this is the play of a lifetime. Very possible. We'll see how high it goes once it ends up squeezing, but it very well could be. Let's see. Hashtag dumb money. There we go. That's what we are. So we're dumb money, right, for buying AMC. Let's think about how just stupid and backwards this argument is. Here, we're gonna pull this up and just show you how stupid some of these what do you call it? News sources are. They're just dumb and they're just stupid. Sorry, I like don't have another word for them. So retail investors are dumb money and are really making a mistake by buying AMC, right? So retail is stupid for doing it. Well, what about the institutions that bought 2.14 billion AMC in Q2? What about them? Are they stupid? Like you don't see any of these different, like especially CNBC, you don't see any of them being like, oh yeah, these institutions are stupid for going long on AMC. No, you see them and their silly news anchors being like, oh yeah, fundamentally, blah, blah, blah. We're comparing it to 2019, even though we fully haven't reopened yet. They're like comparing it to when we're fully reopened to when people are still not fully going back out into society. They are, but not fully. So they're comparing it to that and they're like, oh, I'm short because of that. And then they listen to all of these like great reports coming out about AMC. And then there's a short squeeze thesis going along with it. And then they're like, oh, retail investors, they're the problem. They're the dumb money that's buying AMC. But we just saw institutions buy 2.14 billion in the last quarter. So are they stupid too? Is BlackRock stupid? Is Vanguard stupid? Is Renaissance? Okay, here's the other thing. Renaissance Technologies has been buying AMC. That is the fund that has had the highest rate of return of any fund ever. Their medallion fund, when they had their like original algorithm running on that, I think their yearly rate of return was 75%. Something crazy like that. Like if you saw those numbers, you'd be like, not true, but it was. And then they closed down that fund to outside money. And it was the best performing hedge fund of all time. Let me look it up right now because they've definitely bought and held shares of AMC. Medallion Fund. Here we go. Let's see. From 2001 through 2013, the fund's worst year was a 21% gain after subtracting fees. Okay, that's ridiculous. Medallion reaped a 98.2% gain in 2008, the year that the S&P lost 38.5%. Are you kidding me? This is the highest performing fund of all time. But again, the Medallion Fund is like not open to outside money. It's kind of like hush hush now. I don't think they really do a lot of trading in it, but they're the smartest people in the market, and they've bought AMC. So like, what is this backward BS about how, retail's the problem? You overshorted a stock. We have BlackRock, Vanguard buying a boatload of it. And apparently the only people that are making a bad investment into AMC are retail, not the institutions. It's just backwards. So that was my rant right there. That's rant number 2, I think. Maybe number 3. What do you study in school? How do you know so much about trading the market? I study finance, but it didn't really, I mean, it doesn't, like only 2 classes that have really been useful is econ and fixed income. That's it. How are my old school apes doing today? And welcome aboard to the new ape, says Desert Raider. There we go. Boom. Big money gets bigger. Preach it, Vix. I'm trying, guys. Like, it's just so stupid. Like, let me pull up this Medallion Fund thing for you guys. Like, this is Renaissance Technologies. It was Jim Simons, and this is it right here. From 2001 to 2013, the fund's worst year was a 21% gain. Let's see. By the year 2000, the computer-driven Medallion Fund had made an average of 34% per year after fees since 1988. Simons ran Renaissance until his retirement in 2009. Between January 1993 and April 2005, Medallion only had 17 monthly losses out of the 49 quarters of the same period. Medallion only posted 3 quarterly losses. During 2020, the Medallion Fund surged 76%. Are you kidding me? This fund buys AMC at, oh God. Accounting, learn your accounting. Yeah, I mean, yeah, you're right. Accounting's kind of useful. I just don't like I have to take another accounting class this year, and I just don't want to. Look at Congress from 89 on. Oh, they made a boatload of money too, but that's a little different because they can trade on inside information. How many people started trading career with AMC? Oh, I bet a couple. And they're crushing it right now. Vix, do you think the institutions will sell their shares in lit market even though they bought an ATS, which is dark pools? Is that illegal? I don't think it's illegal. Like, if you buy in the dark pool and now you just have a position, you can sell it wherever you want, wherever you can fill that order. Most likely with those, with those size of their orders, they're most likely going to have to go to the dark pool. But again, it follows NBBO, so it doesn't really do anything. Vix, come on. One beat of the trust. I will trade a thumbs up. Get apish. Light taps for Trey. We can then buy those securities back after the squeeze. If there was 2.14 billion in institutional buying, let's say they bought at the top at 70 to be conservative. It wasn't 2.14 billion shares, Seabiscuit. It was $2.14 billion. Oh, I think you know that. Add that to the 492 million retail shares. Minus 12 million share sales. That's the float. Interesting. Nancy Pelosi and her husband bought AMC. Joel, that is very old info, which is fine. A lot of people were recirculating it because they didn't know. I talked about that when it first came out. Alliance Bernstein bought AMC. Nancy Pelosi's husband owns a stake in Alliance Bernstein, and I'm pretty sure most recently Alliance Bernstein upped their stake in AMC. So yes, The Pelosi family does have exposure to AMC. Uh, Pam, you have to go again. I was multitasking. See you all tomorrow. Later, Pam. Thanks for popping in. Let's see. Yeah. All righty. I think there's going to be a shortage of CPAs after the MOAS. Oh, if you're a tax accountant, if you're a lawyer, oh, you're gonna crush it after the squeeze. Still waiting for Lambo. There you go. Yeah, I said this last time. There's really like no good age to own a Lambo. Like, yeah, you're gonna feel like amazing, but you might look like a complete idiot. No offense to anybody that owns a Lambo. You're probably a really cool person. But if you own a Lambo and like if I bought a Lambo right now, what would you guys think of me? You'd be like, "Oh, this kid probably has like rich parents." But if you bought a Lambo when you're like 60, people are going to be like, "Why is this like old person trying to like look really young?" So it's a hard like in between of like when Lambo. It's like, I don't know. It's like you can't really find a good spot. That's just my opinion. I know a lot of people do like Lambos. I do like the Aventadors though. Those are cool. SUV straight, that's facts. I think that was a little delay. I don't think you guys will see the Lambo comments by the time. We need a verified website for all apes to keep everyone together. What do you suggest to keep everyone together for future plays and to strengthen Ape Nation? Well, I mean, everybody's going to kind of stay on YouTube. Like nobody's really going to go anywhere, I don't think, unless people are like, oh, I don't want to commit to the YouTube grind anymore. But like, why? It's fun. Yukon Huskies for life. There we go. Christopher, do you go to Yukon? FOMO will kick in during the squeeze like never before, but the amount of shares those funds own once they start dumping will be hard to absorb all that selling. Scott, here's the thing. When the institutions are dumping, most likely the shorts are going to be buying those shares. So those shares could get bought up like that. That's most likely why they aren't selling now, because they know it's going to just tank everything. But when the buying volume picks up and they're going to make a killing on those positions, the shorts are going to be buying those positions. It's not like retail investors. It's going to be the shorts. So when everybody says like, who's going to be the buyers at like 1, 5, 10, 20, 50, 100K, if it potentially can get up there, it's like, well, the shorts would be because they're the ones that have to buy the shares back. CT says, I don't want a Lambo. I want an AMC Gremlin. That's kind of interesting. Oh, Review Dork site. Yeah, Gabe does have a website, I think. I try and fight on Reddit, but it's pointless now. People are convinced to not buy options at all. Basic math and a possible time frame helps out. Been here since January and not messing around. Lance, okay, we can talk about the option thing. People always say options are bad. This is okay. We're gonna do another rant. I think this is the first rant, but we're gonna continue it. So, options not bad. It's a net equal. Positives, negatives. Let's do the negatives first. Most likely, the institutions that are loaning out shares and potentially have short positions on AMC are typically the sellers of those options. So what they want is those options to expire worthless so they can make the full premium. So if your options expire out of the money or worthless, then you're basically giving money away to the people who could potentially be taking the other side of your long position. Not good, right? You're basically helping them maintain their margin requirements. So, okay, that's the bad side. The good side is what we saw in January, that all of those options, if they can get in the money, makes those institutions go out and buy shares. So they have to buy shares in order to hedge those positions. Adds buying volume, pushes the share price of the stock up. So the negatives and the positives equal out in the end. I think Alan would be how you would pronounce your name. Alan, thank you so much for that super chat, man. Really, really appreciate it. Thank you so much for that big super. Let's see. When the squeeze happens, who's in on sending trucks of avocados to TMI, gallon water bottles to STV? Oh, I'll take it. And green boom boom candles from Bath and Body Works to Rogue. Aaron, I'm so down for that. I have a picture of avocados from the grocery store on my phone, and if you guys know like the weekend on Twitter is typically when we see like a boatload of drama. So I was just thinking, oh, I'm gonna start avocado, I'm gonna spread avocado FUD on Twitter. But I didn't because I was like, that would be stupid. When the MOAS starts, if there is no shares left, how does the stock keep going down at that point and become volatile when there's nothing left to push it down? TJ, what you have to think about is that there's a flow in a cycle of like the short positions. So not all short positions have been in since $5. We can take a look at Ortex, the average days on loan. It's very high. So the average days that a share has been on loan is 40.27 days. So that's a very significant amount of time, but not all of these short positions have been around for that long. So we could see like shorts from 70 covering down here. We could see shorts on the way up. So there's all these shares that are getting loaned out and returned. And that's just going to keep happening. So there will always be shares to short. So utilization will most likely never get to zero. Short interest will probably never get to zero, but it will fall a significant amount. Like a lot of people, I bet, are waiting for AMC to rip and then short at the top. Like there are definitely people waiting for that. And I've heard thoughts of that too. The problem is that you don't know when the top is. You have no idea. The stock could go to 500 or 1,000 right now, come back down to 200, and people could think it was the squeeze, but then rip to 5,000. Like it's just so risky to play the downside. And it costs you a bunch of money to do that, from the borrow fee rates, the margin requirements. If you're long on AMC, all like this goes back to the strategy between the two parties. It's like, okay, well, the shorts have to do all of this crazy stuff in order to hide their short position, manipulate the stock, create those synthetic counterfeit positions, mess around with the option chain, do all of this stuff. And all the other side is doing is buying the stock and holding, and it doesn't cost them anything like extra. It costs you money to buy the shares, but it doesn't cost you anything additionally to hold that position. And you also don't have to, if you're not trading on margin, you also don't have to worry about maintenance margin requirements. I'm from New Britain. I watched your videos before. Love what you put out, but I'm locked in now after I saw you with the Yukon hoodie. Christopher, thank you, man. Let's see. Real question, not FUD, but if the price gets to 100K, how are the hedge funds going to be able to afford that? One, they're going to liquidate a lot of their other positions. They're going to utilize that new SFT program. There's going to be insurance companies involved. The government could step in. The DTCCs, like endowment fund, could step in. There's also a rule that if you're a member of the DTCC and you're going to pose a big threat to the other members or the entire institution, that you could get removed. But there's also another part of a rule that says other members are responsible for your losses, so they would have to help as well. So there's a lot of different backstops on how this would get figured out. Let's see. Futures looking red. I mean, I'm not surprised. I would not be surprised if the market starts to sell off. I just wouldn't. Let's see. SCB, what's your guys' Discord going to be like? Okay, so there's going to be a podcast section, and then there's going to be the typical Discord section. So the podcast is going to get released in the Patreon section. And basically what's going to happen is that everybody that's in the Patreon will get like first access to the podcast. You're also going to get notifications of that on my membership page. So that's really the only thing, like one of the only things that you get a benefit from the membership on my channel. Or if you just want to help out, that's what that's used for. You're going to get updates on the behind the scenes stuff that TMI and I are working on right now. And you're going to get first access to everything. Like if there's a merch discount, if there's a special podcast episode with specific people, that's only going to be for people in the Discord. That's really it. I appreciate that you called it the DTCC endowment rather than insurance. TMI's avocado, that's what it is. No insurance company is going to insure somebody for $63 trillion. It's basically an endowment fund. Crypto pumping? Interesting. Let's see. Do you think see. Unrest could lead to a market downturn. Sometimes we do see those kind of events lead to sell-offs in the market. It would probably with that, it would have to do with the oil market, most likely. So we're gonna have to wait and see. But if we would look at oil right now, it could be selling off, but who knows? Uh, Tony, it doesn't matter. Could we help the squeeze by asking 100K for retail? No, it wouldn't matter. STV's ice cream cone. Oh, I remember that from when I said I didn't like ice cream too much. Need more shares and sprinkles? Yeah, there you go. Let's see. Any advice for the aftermath of all those capital gain? Wondering if there is anything we can do as individuals to mitigate that. Daniel, you're just gonna have to talk to a tax professional on that one. What do you think of the new BlockFi credit card? I mean, I've seen it. You get the rewards back in Bitcoin, which could be cool, but it's whatever. What more could the hedge funds do to combat us? They could just keep doing what they're doing. The FUD that they're spreading, the infiltration that they've basically provided, especially with this new Gasparino bullshit. Ooh, I swore. Whoops. Ooh, STV said the S word. Yeah, basically all of that stuff. They're just going to keep trying to get into the long's head. Now, the institutions don't care. Like they're going to read the news and act the same way that we do, where it's like, you guys are completely stupid. But a lot of people who are not or have not been in this play for a while or do not necessarily know the extent of how crazy this can get may not understand that the FUD being spread is on purpose. And they know that. So they know that not everybody is like really heavily convicted on AMC and knows the full situation. Who they're trying to attack are the people that are like newer or have not gotten into it as much. And then they're just going to keep shorting the stock. Vix, thanks for the stream. Anytime. What happens when the hedgies cover the 20% shorted shares? Will they be forced to cover naked short synthetic shares? Or is there no way to force them to buy something that doesn't exist? Millie, technically it does exist. So the shares that the true definition of a synthetic short position is it's created through a disparity in the put call parity, which is used to like price options. So if you know the price of one option, the price of a stock, the time to maturity with a discount rate, you can then get the price of the put if you know the price of a call, of like the corresponding call option. But sometimes when a stock is hard to borrow, that equation gets out of whack. So what you can do is that you sell a call, buy a put, and you also have a bond position in there as well for leverage. And that's how you create like a synthetic short position. But the naked shorting, technically, somebody owns those shares. And it shows up as a short position on the institution who's shorting's book. Now they may not even know that it's a naked short. It's completely possible that the hedge funds don't know, but they're still trying to short this company into oblivion. So they have to have some idea of what's going on. They're definitely complicit. The problem is that the facilitators of this are these big banks. It's the prime brokerage operations that are allowing all of these shares to go out on loan. If they realized that they were allowing too many shares to go out to short, that were basically like manipulating the stock, then we wouldn't have this situation. Essie, I saw you working out the other day at the gym. I was going to say hi, but I guess I fainted before I made it to you. Gio, I'm sorry I made you do that. Just pound the buy on those 145s. Lance, you can do what you want, man. Those could be fun if you really want to get into those. Is it possible for hedge funds to start buying the same retail stocks we do and attack that way? If they're buying, that would create buying volume, and that would make the stock head to the upward direction. Let's see. Synthetic shares can't be used to cover a short. It doesn't matter. They would have to buy back that position, guys. So here's how shorting works. You take a loan out from an institution. of a share, then you sell it. So let's just say, for example, to make it really easy, because I think a lot of people get confused. Um, let's use a house for an example. Somebody loans me a house. Then I sell it for some crazy amount of money because I think the housing market is going to correct. Then let's say that house has a 30% decrease in price. I can't then go create a different house and give it back to the bank. They're going to be like, what is this? Like, you can't like print them a fraudulent like paper that's going to be like, yep, this is the house. They're going to be like, no, where's the purchase and sale? They're going to be like, this is not correct. You would actually have to buy back that house for a lower price with the premium that you received. Oh ho ho, we're going to have a special guest in a little bit, guys. He typically comes on towards Power Half Hour, and I think you guys know who he is. So it'll be about 15 minutes, and then he will be on. We'll fight until this is over. 100%. Can BlackRock lend Citadel some of the shares they just bought? They didn't just buy them, Darius. That was June or before. Yes, they can. We've gone over this though, that it doesn't make sense with the current cost of borrow rates for them to do that. They're not going to make any like significant amount of money. And then they're allowing people to push the price of their own position down. So they're allowing people to bet against them. But the positive to that is that they would then be able to recall those shares anytime they want with no reason. So they would force a cover of those positions. Morgan Freeman? Might be. It might be. How come these big companies have purchased thousands of AMC shares, the price has not increased that much? Joseph, 13F filings. A lot of people are confused on this. From the end of the quarter was the end of June. You have 45 days to then report the positions, your new positions that you've bought or sold over the last quarter. So we're still in that time period, but in Q2, we don't see those positions because let's say halfway through the quarter, you buy a bunch of a stock. Then at the end of that quarter, you sell a bunch of that stock. Well, then if you reported the first one, but then you didn't have to report the second one, then it's going to be misleading. So what they do is at the end of the quarter, they're like, okay, what do you have? And then you have 45 days, I believe, to report that. And then once that comes in, you're seeing these numbers, these buys, like right here. So you see how this says Q3? It's wrong. This is incorrect. This is not Q3. I don't know why they report it like this. These purchases right here, the 2.14 billion in buys versus the 143 million sells is from Q2. And Q2 was from April. It was April, May, and June. So these shares could have been bought in April, May, or June. We have no idea what they have bought in July or August yet. So any type of price movement that we would have seen on these shares would have happened back in April, May, or June. Brent, very smart thought right there. I think it would actually be smart to lend shares. Then you could margin call the shorts when you have given them enough rope to liquidate them and then buy the remaining assets at a discount. Brent's thinking. There's two sides to everything. With options, with everything. You can't just focus on one thing. If you're thinking of a negative outcome of something, well, there's typically also a positive outcome too. Yeah, Mohammed, there wasn't 500 million in buys last week. That is just when they were reported. MOAS will trigger a correction, but ape money will help the economy and market recover. That's how I see it playing out. Thoughts, Robert? I agree with you. I think that a lot of the money that the apes will be receiving will be put back into the economy, which is not something that typically happens. Like when the market corrects, typically retail investors, the everyday person gets hammered. They get screwed. This is the one time where retail investors, the everyday person, has basically found like not a loophole, but like a play that has a really high profit potential. And if the market corrects, yeah, it could lose value at first, but the algos may switch to buy after they add to those short positions, and then it skyrockets. It's basically what happened with Volkswagen in 2008. The Volkswagen squeeze in 2008 happened during the worst times of the S&P 500 decline. It went from 200 to 400, back down to 200, and then up to like 1200. It was crazy. So it's like I saw something from Trade Spotting. It's like we're never, ever, ever going back to reasonable land. It's true. There are now so many people that understand all the BS that happens in our market now. It's like nothing's reasonable. The current value, like the previous valuation metrics, don't make any sense or apply anymore. Like the S&P's PE ratio, like, is crazy. Vix, does that mean that those hedge fund shares on Q213S will, yes, drive the price up? No, Jamie. Anything that we saw from those 13Fs were previous. They already happened. The price movements would have already happened. This is just us getting an insight into what the institutions did. So the fact that we are seeing institutions pile up on more AMC shares and held through the June run up and are still buying, awesome sign. Really, really bullish in my opinion. If we saw the sells outweighed the buys, then you would think, the institutions have sold, they're not as bullish anymore. But it's the exact opposite that has happened right now. They're really bullish. And that goes back to what we were saying about the whole dumb money thing and the news, the news media. It's like, okay, you're going to call us dumb money. Well, why don't you go call BlackRock, Vanguard, Renaissance, any one of these other institutions that is long on AMC? Why don't you call them dumb too? Why don't you go get interviews with BlackRock portfolio managers, Vanguard? Why don't you do that and ask them about their AMC position? That would be pretty cool. Like, yeah, it's great to see like YouTubers and everybody and people who have been like really outspoken about AMC go talk about it. But at the same time, it's like, why not bring in a long institution to talk about that? The reason why they may never do that, the best person would be Charles Payne to then do that, is because they know what they're going to say. They're going to be like, yeah, it's probably going to squeeze. And yeah, we're super bullish on it. The hedge funds have done they're just going to say everything and validate most likely everything that we've said. In the like CNBC with all like Gasparino and Kramer and all those people, they don't want like somebody with an incredible amount of credibility to come on and basically blow up their whole short thesis. Let's see. Wow, looks like we got some shills in here tonight. What is going on? Just left an AMC theater catsuit. There you go. Dude, you guys have to stop milking this topic. Mental capital. I don't have to stop doing anything. And two, if you don't want to hear about it, that's just your opinion. And you don't have to watch. It's important because it has to do with how information is spread. That's what we do. If we know other people are spreading misinformation, it's our job to come out and correct it. Hi Vix, in your personal opinion, do you believe there's many/any synthetics? Synthetic short positions we went over, do I believe those are out there? Yes. Do I believe there's more shares out there than there are supposed to be? Yes. Do I believe that it is 5 billion? I think it's theoretically possible. But the only way to prove it is to like have one of those say votes where it's verified shares, but everybody would have to vote. And then once we see that number, then we would know for sure. Any other way is just speculation. Like the statistical analysis is good, but we're never actually going to know for sure. What is the current amount of shares held by large institutions? I believe it's upwards of 135 million. It's higher. It's crazy. We don't really know though. We're gonna have to wait for all of the 13F filings to come in, and then we'll get an accurate understanding as of the end of Q2. But we won't know what the actual number is as of that date. So like right now, if we were to get a number that said for sure the 13F filings are done, they're all in, and the number is 25%, that number wouldn't apply to today because institutions buy more, they sell, they reposition, they rebalance. It just wouldn't be the same. It could be close, but it's not going to be exact. Let's see. Anytime, Stunt Guru. We are headed for a market and housing crash. It's possible. I don't know about housing. Housing's really going to depend on rates. If rates go up, yeah, it's a very similar dynamic with rates and housing prices that it is with like the rates on bonds. Rates go up, price goes down. Rates go down, price goes up. If you have haters, that means you're doing something right. Oh, Joshua, I got a lot of haters. It's fine. I don't really care. Um, people love to say that the liquidations have not happened and that I don't know that the margin calls are coming. Well, one, Goldman Sachs comes out and says they did already. So that's one proof, Q2 earnings. And then we have all those other banks saying that they're projecting basically a 10% drop. Okay, if you think there's going to be a drop, what are you going to do with your position when the market's going up? You're going to sell. What is that called? Liquidation. Point two, margin calls are coming. Yeah, they are. One, they're happening right now. And you're never going to know that they are because there's not going to be a news article. Two, the DTCC, it's the head of, it's like trade execution or something, or trade clearing. He literally said, yeah, we're expecting a surge in margin calls starting on September 1st when our phase 5 UMR program kicks in, and it's going to be mainly surrounding OTC derivatives. Okay. It's right there for you. That's why when people are like, you don't know it's coming, it's like, all right, dude, you didn't even watch. Vix, understand that we can't make price predictions on the stock, but with the knowledge from now, the AMC call with the share count, can we model a price range? Not really, Jamie. Mohammed, what are all these people saying? Yeah. What's Lamborghini stock in a row? I know, what do you call it? Rolls Royce is public. SV, will you eat me after the Mo has to celebrate? S says STV's ice cream cone. Maybe. Lambo is owned by VW. Ha, that's funny. Let's see. Buying 3 houses. There you go. I have Rolls Royce shares. It barely moves though. Yeah. When will this AMC thingy pop back to 45? We don't know. There are a lot of different models that are projecting August to be a really strong month. With what we saw last week, we could be seeing the start of an uptrend. We'll see tomorrow though. This is kind of like the pre-market stream. We're just kind of going over everything that we need to know going into next week. Let's see. SUV, wouldn't the government be incentivized to let it rip already because of all the capital gains? Yes, but think about it again. Pros, cons. Everybody in the government and the government has something to gain from AMC squeezing and collecting all of that capital gains and regulating, maybe not regulating the markets, but they also have a lot to lose. Now, here's the other thing. Probably we're going to see a very similar situation to what we saw last March, when most of the leaders in our government sold out a lot of their positions when they knew that things were going to start to close. If they know that the market's going to start to go down, if they know AMC is going to start to squeeze, then we're going to see them make moves. We've seen it in the past. I would not put it past them to do it again. It just makes logical sense. Coach Kors is really very real football bat. That's a cool name. Thank you so much for the super, man. I appreciate all the work you guys put in. Keep it up. I am feeling 40 to 45 this week. That would be awesome. Thank you so much for the super. Without you guys, we wouldn't be able to keep doing this. So thank you so much for helping to support me and the channel. It really means a lot. Rolls Royce sounds kind of boring for this ape. If I were to get a Rolls Royce, I would need to have a driver. I think that's where I'm at. Rolls Royce or a Bentley, you would need to have a driver. I feel like the hedgies can't do this much longer. Larry, I agree. We are seeing that liquidity metric start to go negative, which is it usually leads a market correction. We're seeing this 200-day moving average right here at 397-ish. And Bank of America has come out and said that they're pretty bearish on the market going forward. And they think that this 200-day moving average could get tested in 2021. If it doesn't, it'll only be the 14th time that it has happened since like 1929. So it's not likely that it's likely that we see this test. We have the debt ceiling. There's just so many things. It's like you can't ignore it at this point. Like, I don't want to be a bear at all. I don't like it. Like, I hated, like, for the longest time, I don't like buying puts. I always think a stock is more likely to go up, over the long term than it is going to go down. But with everything that I'm seeing right now, it's like, God, there something's very wrong with what they've done. Um, Juan Martinez, thank you so much for the super. I appreciate all the work you do, bruh. Thanks so much. Juan, thank you, man. Imagine the NFL and AMC theaters for local games. That would be nuts on Thursday, Monday, Sunday. Oh, Aaron, that would be electric. Half a mil car in a Rolls about the price of an Aventador. I bet you could get a deal. After the MOAS, I'm going to replace engine for my Silverado pickup truck. Hey, I think the car that millionaires own the most of is like a pickup truck. Keep it simple. Get a new 2021 Ford Bronco. I've seen a lot of those rolling around. Let's see. After yeah, we hit that one. Let's see. So I think we're going to get TMI in a few minutes. I really want more shares, but don't want to spend any more money. Worth it to trade when it goes up and buy when it dips. Robert, you can do whatever you want, man. It's really your decision to do with your money, to do what you want with your money. Stonk Guru, VIX for the synthetics, are they tracked well? No, but here's the thing. Let me pull this FINRA rule up for you guys. It's FINRA 2119, I believe, is what it's called. Here's the one thing. Let's see. Right here. Okay, so this is FINRA 2119. If you guys want to take a look at this on your own time, this is the new FINRA reporting rule that they want to implement to have greater transparency in short interest reporting. So right here, synthetic short positions. In addition, FINRA is considering requiring firms to reflect synthetic short positions on short interest reports. For example, enhanced short interest reporting can include synthetic short positions achieved through the sale of a call and a purchase of a put. Exactly what we were talking about earlier with this, where options have the same strike price and expiration month or through other strategies. FINRA believes this information would assist FINRA in understanding the scope of market participants' short sale activity, specifically regarding the use of less traditional means of establishing short interest. So that's very good that we could potentially see that if this rule ends up going into effect. Your friend Will. That's an interesting name. Shout out to my friend Will. Thank you so much for the super. Can shorts buy from institutions holding shares and hold on. Can shorts buy from institutions holding shares? Yes. And buy shares they need to cover in dark pools from them and bypass us retail and save money. It doesn't matter where they buy because all of these venues are most like I'm 90% sure that they are 99% sure that all of these venues are following the NBBO. So it doesn't really matter where they're buying. It's still going to affect the price where they cover. But yeah, we would see that influx of buying volume. Thank you so much for the super, though. After this, oh boy, CT. Let's see. Justin Hamby, thank you so much for the super. I believe the mainstream media credibility hit will be just as big as the MOAS. Keep it up, bro. Justin, thank you. Yeah. Let's see. Simulating Trade is saying he thinks the hedges are funneling plays through Brazil and passing liability onto brokerages. Thoughts? I haven't taken a look at that, but I would definitely like to. Also, Simulating Trade did just lose his father. So definitely go show your support for him on his channel, his Twitter. He's definitely going through a tough time right now. So definitely go show him all your support, guys. What about new margin requirements that's supposed to take effect in September? Saw that Citadel sent a letter complaining about it. Yeah. So those new margin requirements are really, so what they're going to be affecting is those OTC derivatives. Now, when you think of OTC derivative and you think of OTC, typically you think of like over-the-counter stocks like the pink sheet, the penny stocks. That's not what it is. Over-the-counter just means like off exchange, kind of. There's no like middleman. So what they do is they can do these like swap agreements, flex options, some futures contracts. I believe you can do it with too, where you can lever up and essentially get these over the counter derivatives where those positions derive their price from an underlying asset. Now, Warren Buffett has basically said that derivatives are like the ticking time bomb in the stock market, that it's going to be the cause of the next downfall of the United States financial markets and the economy. Right now, the derivative exposure of the top 4 commercial banks is 168 trillion. All of the commercial banks is 188 trillion. So it's crazy high. In 2008, it was right around the same range, but you got to think inflation, we still might have some way to go. But again, the exposure that they have in these positions is ridiculous. Jakeem, thank you so much for the super. Just followed you on IG. Looking forward to the day we can all celebrate. What's the best site to see if shorts closed any positions? Jakeem, I think it would be Ortex would be the best way to know. Ooh, that was bright. Sorry about that. That would be the best way to see like the baseline number. But what I look at is utilization. The reason why I'm looking at utilization is because it can lead a price movement to the upside, because we could then see an uptick in forced share recalls, which is the forced closing of short positions because the brokers may not be able to get their hands on more shares. They might have issues with like the borrow fee rates. They want to negotiate a higher rate and they have to take those shares back, loan them out to somebody else. But again, it results in the same thing, that when utilization's high, there's less shares and it leads to a higher percentage of one of those forced share recalls. But we're really not going to know. So, Jakeem, we're really going to have to create our own strategy. So you kind of have to pick a couple of numbers in your head that you're like, okay, if it gets to this number, when it squeezes, I'm happy. I'll sell out some of my position and I'll let it ride from there. Or if it gets to another level, I'll think about selling again. You just got to have your own plan going into this trade, into this squeeze. That's kind of how it is for like any stock trade. You're like, if you have a plan and you execute your plan, you're going to be fine. Hopefully whatever happens in Vegas stays in Vegas for real, because I'm not sharing that with my wife's boyfriend. Oh my God. Oh my God. Are you short AMC? No, free play. Why are there so many shills in here tonight? It's fun. Maybe because I said that all those people at CNBC are stupid for calling retail dumb money, but not having the institutions like BlackRock, Vanguard, Renaissance, and all them onto their shows to explain why they're long. They only have people come on to say why they're short. So like, it's just silly. Vix, I do, Brandon. As always. Uh-oh, everybody. We have a special guest in the building.
Hello, hello.
Hello.
Got my entrance down pat. What's going on, buddy?
Not much. I've just been kind of roasting CNBC for a while.
Oh, love it. Love it. What we got here in Ortex? Any crazy updates?
Now, just the exchange reported short interest is a lot higher. I think that could be one due to more institutions or like shorting, and that there's more shares out there because of all of those offerings.
Got you. Okay. Yeah, there's a lot. A lot, a lot, a lot. What's going on, people?
Not much.
They hate us because they ain't us.
That's true. My main argument was like, why are why don't they like have people on like a portfolio manager from BlackRock, Vanguard, even Renaissance? Like that's kind of what I went into too. It's like Renaissance's returns, the lowest return that they had from like the 90s to like 2010 was like 25%. And they're long AMC now. It's like, come on.
Yeah, there's a you're kind of touching on a bit of what I'm going to talk about in tomorrow's video. I was going to make it tonight, then I was just like, let's just ease into tomorrow.
Yeah.
I don't think people are really touching on how big BlackRock is in comparison to these hedge funds.
Oh, I've got a video for you if you want some information. Not mine, but another one that I've seen.
Oh yeah, sure, send that. I would love to because
Yeah, good
I'm kind of
info.
digging into it. I'm like, there can be what managing $10 trillion worth of assets. We're talking about hedge funds that are worth what a few billion.
Uh-huh. Think
Like
of okay,
we're
so they
talking.
have this platform called Aladdin, and it's this computer platform that basically it's just a big algo, but that platform has like $22 trillion of money in it.
And that is twice the size of Citadel. Like,
Well, no, of BlackRock, like they it's because they like license it to other people, but they're
oh my
using BlackRock
goodness,
stuff. So their program controls like 10% of the stock market or something
that is
crazy like that.
ridiculous. Yeah, actually, if you have, yeah, later on tonight, we have that link. Let me know.
All
So
right,
I would
yeah, I'll
love
send
to
it to
take a
you.
look at that bad
It's
boy.
the YouTube channel that I was talking to you about earlier. It's like the one of the more recent videos about BlackRock.
Oh, okay, I'll find that in 2 seconds. That is interesting.
Yeah.
What's going
I
on,
like
people?
really want CNBC to have like a BlackRock person on, a Vanguard person on, a Renaissance one. It's like they're not going to because they're just going to blow up their short thesis.
Yeah, it's a weird, very weird space that we're in right now. We're gonna look back at these times and laugh of how
Uh-huh.
ridiculous the news was.
Yeah, BlackRock's also buying up all the homes. That like almost makes me more comfortable about real estate because they're paying so much over. But
Yeah,
I don't know what they're doing. That's the thing. You don't know what they're doing.
I saw a question or a statement came in there from D. Byron saying that he hates when his friends ask him how many shares he has. And what I would say is this: you either have two types of friends who are asking that question. They're either asking to judge how much risk you're putting in so they can mimic it or judge how convicted you are,
Uh-huh.
or they want to know how much money you're going to have if it goes up or down. And
Mhm.
if it's the latter, it's no good. If it's the former, then that's okay. Because if they're just trying to figure out how invested you are in the stock, then by all means, they're just trying to judge. Like people say a lot of things. Yeah, this stock, this stock, this stock. But like, put your money where your mouth is. Are you invested in this stock? Like, are you actually in this? That could be what they're thinking. If they're just trying to think like, hey man, look, if this thing goes down, I want to know exactly how much money you lost. Yeah, then don't worry about those guys. Once you
Yeah.
figure out which one of
Like
those two it
people
is.
just don't get it. I think I went over this earlier. It's like people like I bet because I've gone through this too. People are like, "Well, why are you talking about AMC? Like, why are you invested into AMC? Like, it's a movie theater company. Streaming is taking over." It's like I'm like, okay. The only thing I say is, have you done the research? Have you researched it all? 90 to 99% of the time, they're just like, no. It's like, well, okay, you're talking about the fundamentals of the company. One, they're continuously increasing. They just did that deal with Warner Brothers. Streaming really isn't that big of a threat because people still go to the movie theaters. And then there's the short squeeze aspect to it. It's like you really just don't know what you're talking about.
Yeah, they literally just heard CNBC talk and they're like, okay, we got the story now. We got the scoop.
And that's why we need to rank above them.
That's why we need you guys to like this video. Actually, you know what? Let me go like this video before I tell you guys to do it.
Thank you. I like all of your videos too when I see them pop up.
That's very true. You do. I need to go do this right now. I'm gonna go do it
Um,
with my real channel and my backup channel. You must be
there you go.
who likes.
Thank you. Yeah, that's the thing. Like I touched on this earlier when we had some people in here that if somebody I think I heard this from TMI. It's like if you are a new ape and you're like, "Oh, I want to learn about AMC." You're probably not going to Reddit or Twitter because it's not like a consolidated place to find information. You're probably going to go to YouTube. Now, if you type in AMC or AMC stock on YouTube right now, most likely CNBC is going to be the top 4 or 5 videos and they're just going to be spreading BS about AMC. It's like, well, if you're trying to learn and you're seeing these like supposedly credible newscasters saying bad things about it, you're going to be like, "Oh, this doesn't seem like a good
Exactly.
investment." It's like, no, they're just stock bashing. Like,
That's exactly it. The the guys who actually made that video talking about how the algos are all messed up on YouTube. I think they're called like the alpha stock something.
oh, alpha status stocks. I think I've heard of them.
Yeah. So
Did
I
they
messaged
talk
one.
about it?
Yeah, they put me on one of their thumbnails
Really?
to their video. So I went to go check out the video because I was just like, oh, this is intriguing. I hope they're not talking crap. And they were just saying like these guys got the channels deleted and take a look at YouTube algos. They don't have the most views. Like most of the points that I got was from their video, and I gave them a shout out. Right? I was like, this is
Mhm.
great. So I sent them a message on Twitter, and I was just like, guys, let's chat to one of them. There's two guys, right?
Yeah.
So he sent a message back. So he's down to make a video. He didn't. I don't know if it's gonna be live stream or content, but we'll connect after this call and we can chat about it. because these
Yeah,
guys have it
because
going on right now.
it's been messed up. I think I first saw it in June.
Oh yeah, you're right. Oh, you know what? You might have brought it up a while back. Yeah,
Mhm.
because you're on like you're pretty good at SEO.
Oh yeah, well yeah, because that was like my thing. I was like rank and search, like figure out a way to get like the new audience type of thing. But then all of a sudden you would search AMC and it would be like CNBC, Fox, and you wouldn't even see like Trey, Matt, the big dogs pop up, and you're like, huh, what is going on? They should be the first ones here, and they're not. So something's off where they're pushing these news sites first, which is bad because they're not spreading the truthful information. They have a nefarious agenda.
Yeah,
Our agenda is very clear. We're just trying to educate people about this situation. And if they want to invest money into it after if listening to what we have to say and doing their own research, that's up to them. But what shouldn't happen is they just go and watch a CNBC video where they're just like, "Oh, it's bad. I'm sure it's gonna go down." It's like, why?
exactly.
Like none of it makes logical sense.
Exactly. And it's really and I was doing research into that's I want to kind of dig into this research before I actually speak with those guys.
Yeah.
So it's a good conversation, but it's one of two things. It's either we are fucking up or someone's trying to fuck with us.
Yep.
Not my channel, no synthetic swears, just FYI,
Oh, I
okay?
swore earlier by accident. I said bullshit, and I was like, "Oh no."
So then it's either okay, so one of two things. One is what we think it is, which is just like nefarious play, where it's they're trying to get over the first impression from new retail investors looking into AMC. But the second thing is the content that they could be creating could potentially become very profitable for these news networks to the point where they want to spend the money on SEO and attract people because they know that people are going to engage with it if they spend let's say for every dollar they spend they get 250 worth of engagement. You know what I mean? So we have to do a combination of not only engaging with the YouTube channels or the content creators that you guys enjoy, but also not interacting with the content that you guys do not enjoy. It has to be a combination of both.
Right.
Like they can't have an ROI off negative news because then they're just gonna keep it pumping.
Right. Like when you see like I think me and TMI both did it in our videos over the weekend. It's like in our pinned comment, it's like, hey guys, we're trying to get ahead of these news sites because they're not putting out good information. And the way to do that is you like have to engage. It's just how it works. It's just how the YouTube algorithm is. If the video doesn't get engagement, it's not going to go anywhere.
Exactly.
So like if you don't want to, it's fine. We're just going to keep CNBC at the top and that's going to be it. And we're going to have to deal with it. Perfectly okay. We'll figure it out. But
That's gonna be an interesting one. I think I'm gonna do another slideshow video at some point in time this week to break down like the different social channels and how they work and why the infiltration has kind of worked the back way up. Like first they hit us, the most DD is Reddit,
uh-huh.
and then the most awareness play is like Twitter.
Yeah.
And then so they hit us from the bottom up. Like they went for Reddit first, you know what I mean? And then you go to the different investing sites, StockWits, Webull, whatever it is, and then you go for YouTube, and then you go for Twitter. It's like soon they'll be on Instagram and Facebook. Well, Facebook apparently they're already there, but
Yeah, I've never been on a Facebook AMC group.
and that's the thing. None of the main creators have been, but apparently the shills are coming in the thousands from Facebook.
Really?
Yeah, I was watching I forget what his
Maybe
name is.
here's a little tinfoil theory. Maybe it's because people on Facebook, the average age is older. So they might have more
Whoa, whoa,
money.
whoa. Easy. Be careful. Be
What?
careful. Everyone in this chat is probably older than you, so you're gonna offend a lot of people. Be
No,
careful.
like it's the average age of a Facebook user is like in the 40s, I think. So
Right.
like most of those people are going to have more disposable income. So they could have a larger position in AMC. If they can infect them with FUD, it might hurt more. But like that could be their theory. I would not put it past them. M. Kriegs, SCB, did you ever get a chance to look at the Citadel list? I looked at the Citadel list and that MIT paper on the pecking order of dark pools. And also an ape made an entire AMC document. M. Kriegs, I looked at the Citadel list, but I did not look at the MIT paper. I still have to do that. And then Shadra said, thank you guys so much for the supers. The news sites pay Google for advertising using hedge fund money. They can pay a shill or bots. They'll definitely pay to optimize FUD. Yeah, they will. I just don't know how they're paying to be at the top of YouTube search because you'd see it as like a sponsored video.
Yeah, that's true. Well, there's always, you know how there's like the big boys table for investing? I'm wondering if there's a big boys table for SEO as well.
What do you mean?
Like, um,
Like in
there
terms of
are
creators?
no in terms of if you're in advertising. So in advertising, you
Oh,
can
yeah, yeah,
have
yeah.
like a partner relationship.
Yeah.
So if you're of a certain quality, certain caliber of a client to bring in a certain amount of dollars per year, you can create your own deal. Just like you can create your own options. If you have enough money, you can create your own deal for advertising. Where it's
Yeah.
like
You just
people
need
don't
an
see.
ISDA.
That's it. Is the advertising.
Post squeeze, I'm gonna get an ISDA just to have one.
Ooh,
Honestly, if anybody could like qualify to like get an ISDA after the squeeze, you should do it just for jokes.
that would be so gangster. And then post it.
Yeah, just be like, I have an ISDA.
We should create our own hedge fund after this.
Put it in your dating profile that you have an ISDA. See what happens.
Put it on my. Oh. Hold on a second. What time is it?
It is 9:35. It is power half hour, but I think let's mix a little power half hour in, but let's keep it going with the AMC and FUD bashing talk. That's what we should call it. FUD bashing.
Basically, like the FUD bashing half hour.
Yeah, we could do that. I mean, we'll still like, I know Pushin said some wild stuff just now.
Shout out to the mod squad.
You've got mail. That was pretty good. Facebook, they're spreading FUD on MySpace. Oh no, there's 4 of them. Can the circuit breaker at 10% increase within 5 minutes be removed to speed up the MOAS? No, they're not going to do that. That's also why the squeeze is most likely going to take a long time, because they're going to be buying all of these shares and they're going to hit that 10% and it's just going to be like, halt. And then they'll wait and it'll keep going. But again, if you see suspended or halt on your broker, it doesn't mean that AMC got delisted. So I don't want to hear anybody freaking out because that would be terrifying. It's just what happens. It's a volatility halt. Everything's fine. It's honestly pretty bullish if we get there. We saw it in June.
Yeah, you know what's a good idea? If you guys have any questions about the squeeze, ask them now. Let's write these down and let's include them into a couple of videos.
Yeah.
Because we're going to be on a. Oh wait, did you speak about what's coming up this month?
With the September 1st.
Yeah.
Yeah. I've talked about that a lot. I addressed it at the end of my video today because I got a lot of comments that were like, he says no dates. Also, September 1st. I was like, come on, guys. I feel like you know by now that a margin call for OTC derivatives is not a forced liquidation of an AMC position. Like, it's
Different
not.
things, people. Different things. Yes.
Yeah.
But it looks like we're heading towards a bullish run.
It does.
Right. So, and that's why I was like, all right, let's talk to a few other creators. Let's get some more perspectives in here and let's do it. But as we're heading towards another bullish run, if there are any questions that people have, let's answer the questions now, get rid of the misinformation so that people don't get worried when they see their accounts go green for the first time in 2 months.
Yeah. Oh, I wanted to touch on something today.
Touch it.
All right. Here we go.
That's what she said.
This isn't a rant. It's more of just like a psychological thing.
As
So
people say right before they
everybody
rant.
is so I would go out on a limb and say that about half of the people in this chat right now are green on their AMC position. Conservative number, half of the people are green. It's either you're really green, 30%, 10%, doesn't matter. You're green. If you were one of those apes buying between 5 and 10, you got used to seeing your account fluctuate maybe 10, 20% in a couple of days if it was a volatile week. Then everybody got used to their accounts being at 3x, 4x, 5x what was in there when the stock got all the way up to 70. Now that it's come back down to 30, everybody's kind of like comfortable and irritated about where their amount is in their brokerage account. And if you think about what you had 4 months ago, you would be thrilled at the amount that you had right now. You'd be like, oh, we're at 30, 35 right now. Awesome. That's great. Yep. But just because we went all the way to 70 and came back down, yeah, I understand there's a lot of people who bought in higher, but you're getting used to this amount of money in your account. It's going to keep happening. We're going to rip up. We're going to make a higher low, and you're going to get used to that amount of money too. And you're going to be like, well, it was higher than this before, and now it's at this, and I feel bad that I may not have sold at the top, yada, yada, yada. Doesn't matter. You still made a bunch of money. You're
And
still
everything
up.
you made is still, in my opinion, not a financial advisor, is still pennies in comparison to what it will be.
Exactly.
Pennies.
Somebody says, Vix, you can have YouTube clan as a whole remind people about the volatility halts to tame the panic, please. Yeah, I'll start touching on it. Depending on, I'll probably start touching that when the utilization gets to 98 or something, because one, the short interest right now, like the amount of shares that are like actually shorted are very close to the amount that we saw when we started to run up. Like right here, the exchange reported short interest is like, what is it? 85 million, and we got up to 102. That's like 15 more million shares, and they took out 14 million in a day. So there just has to be a net short of 14, 15 million shares to get us back to June. Now the utilization won't be 99 or 100. It'll probably be like 97.
Yeah.
But it'll still be up there.
Oh, it will be. I'm very interested to see what it says tomorrow morning. Very interested.
Me too. I think pre-market could be interesting because I don't think we saw the effect of those 14 million shares yet.
Exactly.
But there's also some options that expired in the money, so we're going to see what happens with the buying volume. I think they're going to, again, we've seen red pre-market and then a rip to green, and then we do whatever. It's like they're warming up, honestly. The stock just warms up in the morning.
Yeah, I think. How many people do you have on the live right now?
Like 820.
Oh, wow, that's a bit of a high number. Well, we'll see it. I think we're gonna have a very bullish week. Now, I don't know how long it's gonna be like that for, but I think we have another green week. And after last week, the way that we've got shorted to shit and still held and turned out for a green week has me feeling like they are in trouble. Like, don't get me wrong, anything can happen, no times, no dates. But just in regards to winning the little battles while we're waiting for the war to be finished, I think last week was a win that might, follow through to this week.
I think so too. I also think we're just going to see a lot of volatility. Like I think the price movements are going to be like 10% green days, 5 to 10% red days. Just because of all these options that are close to the money right now.
Yeah, and I think as apes get smarter and start cashing out options and buying shares, like it's just as time goes on and apes are getting smarter, it's getting harder and harder to shake people out of their money.
Exactly.
Because it's like people learn. It's like not everyone, of course. Some people are just gonna play YOLOs until this thing squeezes and just waste a bunch of money. All right, that's fine. But that being said, people learn. And now that we've had 6 months of learning, like it's a dangerous group of 4 million people. Like
Exactly.
it's tough.
Oh my God. Fuzzy, thank you so much for the super. To all the new apes, hang in there. I've never traded a single stock before January. I'm up 44,000% all time, and I've taken gains. We will moon ape strong. Fuzzy, that's insane. Congratulations.
44,000% is nuts.
I don't know if you meant to just say 44,000 or 44,000%, but either way, that's nuts. Sold my neighbor's TV, buying more shares tomorrow. Rudy, you technically shorted your neighbor's TV because you sold something that you don't own.
That's hilarious.
There can't possibly be any more shares to buy, or am I delusional? There's always going to be shares to buy if there's somebody willing to sell.
That's it.
I'm green, but I buy a share a day. Aaron, nice. All this DD, we are the smart money now. Yeah. Look what smart money did over Q2. Boom. Dude, that's so bright. Oh my God. Also, TMI, guess what I have today on this stream? 1080p.
Oh my goodness. I was just like, what is it? What is it? Let's see here.
Yeah, smart money
We
bought
do have
2.14
1080p.
billion shares. Oh, and Fuzzy, thank you so much for the super. 44,000%. Oh my God.
That's gangster. Oh, that means you went in heavy on some options, my friend.
Oh yeah. I'm gonna take a guess and say Fuzzy had some of those Some of those June 40s hit a play before AMC, threw that in there.
He
Oh,
hit a
Fuzzy's been
lick and then
crushing it.
hit a lick and then hit one more lick.
Oh yeah.
Hey Fuzzy, real question. Are you a gymnast? The way you be flipping those calls.
Dude, this is insane right here. I just like, come on. You know what we should do? No, I mean, if Matt and Trey want to go on Fox, awesome. Go for it. They're perfect for it. Other than that, right now, I don't want to see anybody else go on until we get a a person from BlackRock, Vanguard, Renaissance, or any of the big boys who have taken large positions on AMC.
I'm with that.
Like, let's just like, come on. Like, if the whole thing is like we're dumb money. It's like, are you kidding? The most successful hedge fund of all time is long AMC. And the least successful hedge funds of all time are short. Like, I'm fired up tonight.
This is good. Moo says she sold her husband's what? I sold my husband's time for more shares. I thought she said she sold her husband for more shares.
I mean, you just shorted your husband then.
Hey, Vignan, how'd you know it was laundry day? It is laundry day.
Who said that?
Vignan said,
"Is it laundry? Oh, is that why he's behind? Because he's got all those naked shorts."
That's it. Oh, buddy, design some naked shorts for the shop today.
Oh, you did? How'd that go?
It's looking good. Looking naked. Can't really see them, to be honest.
Okay. I just have my normal one, and then I have the short low cover high one. That's a good one. I gotta get one of those.
Love that.
Vix, is your daddy a baker? Because you got nice buns. Thank you. It's kind of weird that you know that, but you know, BlackRock and Vanguard are long AMC. I know, that's why I want them to go. Somebody to go on like a portfolio. I don't know if they would do it, but I think the effort should be there.
So hold on. Because this is part of I'm just giving you guys basically like half of the BlackRock video right now. How much did BlackRock make lending out shares last year?
I don't know.
I want to say it's near $1 billion.
How much?
Near $1 billion. Like just by lending out shares, right?
It's not very much compared to what they have.
No, of course. But what I'm saying is like, if they're making money off lending out shares, they're going to torture these hedge funds. Like this has nothing to do with apes. This is just big money talking to big money right now, right? They're going to torture these hedge funds, torture them, pay me interest. They're going to pull the shares out, watch the stock go up, give them the shares back, and charge them more interest. And they're going to keep torturing them for as long as possible. Because when it squeezes, they're going to squeeze. In the meantime, they're making money off of interest. They cannot lose in this play.
That's true.
It's just a win-win. Now, mind you, apes are going to get their money. Like apes are going to get their money. But in the meantime, BlackRock's going to BlackRock.
Mm-hmm.
And I'm cool. I am so cool with that. Look, you guys want to make a little bit of money in the meantime, and then we squeeze, and you guys change my life? By all means, buddy, do your thing.
Yeah. Exactly.
Do your thing.
I saw a really good idea. You don't not have to go on the news. Just mention your point about BlackRock when you go on.
Interesting.
I still haven't asked Charles.
Yeah, I need to speak to. Actually, no, I'll tell you after this. I'll give you the rundown of the game plan.
All right.
New game plan, new information.
There we go. Vix, what do you study at UConn? Finance. Oh, and I think I have a real estate minor too. I think I took enough classes to be a real estate minor.
Wait, you think you have a real estate minor? You got to figure that stuff out.
Yeah, it's fine. I just have to declare it. Like if I've taken the classes, it doesn't really matter. Like because some of the reason I did it was because you could double dip on like finance requirements and it counted for the real estate minor. So I only really needed to take like 2 other classes.
Nice.
So I have like 60%, I think, of an appraisals license right now. If I pass the second test, which I don't think I did because I was making YouTube videos, but it didn't count for my grade, so it's fine.
Good old YouTube. What
Yeah.
a place to be, though. Look at these people. It's just a lovely place to come chill.
Oh, dude, I was so miserable during final season. Oh, I uh I was making 3 videos a day, and I also had to study for finals.
Yikes.
Oh,
Do not wish that on my worst enemy.
it was bad.
I forget who asked, but the merch store I will have on my channel, and I'll link it in my Twitter bio after. I think it'll probably be done later on this week. I mean, the
Yeah,
plan was to have it done by Thursday, but yeah, we'll see. We
yeah.
shall see.
A lot of my teachers, you know how they pronounce finance? Finance.
They should not be teachers.
No, I have some cool teachers. I'm pretty sure one of them is like he's on Twitter. Like I'm really because I heard him in a space call one time and I was like, "You sound like my derivatives teacher."
Oh, really?
Yeah.
So he knows you're on YouTube.
Oh, he might, but I don't think I never went. Like I really didn't go.
That's
Here's
hilarious.
the reason though. Like the reason I wouldn't go to this class was because one, it was just like calculating the price of an option. I was like, yeah, I think I got that. But the thing was, is that like we would do all this stuff. He would make it seem way more complicated than it actually was in class. You also couldn't really understand him or read anything or that he was writing. And then he would give us like a mock test and he would go through how to do all of like the 8 questions. And then on the test, it would just be that with different numbers.
Jesus.
So I was like, okay. So I just learned how to do this and then plug them into that, and then I get
Yeah,
the
I don't
answer.
need to go to class. I'm
Yeah,
good.
I was like, I don't have to go to this one. That one I didn't go to.
Oh, that's
There
a
was
great
another one I
teacher
didn't
though.
go to, but then I had to watch all of the lectures, which that hurt.
SDV team, I've been seeing a lot of talk about the $1,000 price target. Last month it was 300. Do you think they are going to gauge when people sell? Okay, so there's something that is unknown, and is how many people are going to. Well, two. One is how many people are on the sidelines waiting to jump in. There's a lot. We don't know what that number looks like, and there's no way for us to find out. Like that's literally like you have to read people's mind thing by the masses. The second thing is if this price goes to 200 on Monday, and it won't, I guarantee you 100% it will not go to 200 on Monday. But hypothetically speaking, if it goes to
Clip it.
200, shit. If it goes to 200 on Monday, how many million people do you guys think would want to invest the next day? To me, it would be a lot. Like it would be millions of people the next.
Oh, I would the next run up, I'm gonna be talking on Twitter like real bad.
Say that again?
Oh, the next big run up that we have, I'm gonna let everybody have it.
Oh, for sure. And listen, the fact that Charles Payne said 1,000, I was just like, the size of the balls on that guy, it's got to be ridiculous.
He said
You
a
go out.
thousand?
He said I'm not going to talk until it gets to 1,000.
No, he didn't.
That's what he tweeted out.
When was that? When was this?
He tweeted out this week. I think on Friday or this weekend. He said something like I'm going to save it until it gets to 1,000. I was just like,
Oh, why didn't he
oh,
tweet that out during the week?
bro, I'm telling you right now, the dimes on this guy right now is stupid.
Oh yeah. Was it a 3-hour lecture class? No. Oh, I forgot about that. Oh. I have to take a biology class this semester. This is like the first semester since my first semester that I have classes on Fridays. Doesn't really matter though. I can't go out on Thursdays anyway. I'll just be hanging out with you guys at night, so it's fine.
Oh ho ho.
Yeah, you guys make me not be able to drink anymore. It's fine. I don't need to do that. Got it out of my system. Tweeted it like 2 days ago. Gotcha. A lot of professors can teach what they learn in a book, but don't have the real life experience. That's what that you need. Yeah, the professors that I had like the most I don't want to say respect for, but they were the ones that were like working during the day and then teaching at night. So I was like, oh, you do this. You know exactly what you're talking about. Then there were some that like used to work in the industry that were like, okay, cool, you did this. Now you're teaching. That was cool. But the people that have just been like, career teachers, awesome, good for you. It's just for me, I want to be able to like learn practical things and not theory. Does that make
Yep.
sense?
Yeah. I actually won't be able to practice what I preach. Yeah.
How's PE going? Guys, you don't want to know what my PE is.
His pee is yellow.
Hey, not after all this liquid IV I drank all the time.
You know who else was sponsored by Liquid IV?
Oh God, was there another one?
No. Big guys, big dogs.
Who?
Brilliant idiots.
They
I,
do sponsor people.
I was just like, interesting. You don't say. So they're making the rounds.
All right, Liquid IV. I'm like probably I talk about you and you don't even give me anything. Think of how much I would talk about you if you like gave me something. Like I would just plug you guys the entire time. SCV playing see, hey Tony Montana, you typed that out wrong. I don't play hooking at school. That would be playing hooky. It is power half hour. We can let it fly a little bit.
Oh, buddy.
TMI, you see that one?
No, hit me.
TMI, answer if you're comfortable. You said your dad was interested in stocks. What does he think of AMC?
Balls deep, my friend.
There you go.
Diamonds deep. Diamonds deep. Listen, it's a lifestyle, people. Okay, you know, some people have religion, some people have faith. You know, I got AMC.
Yeah, I think I learned more about the financial markets like being on you like creating on YouTube than I ever did in class. But this week I one of the articles that I read was about duration risk and like duration gap. And that was from one of the classes that I would this is like cuz I would always say like basic econ if you know how to apply it in fixed income. And that was one of the things we learned in fixed income where it was like duration risk is not like the maturity of the bond, it's like how sensitive the bond is to a 1 basis point change in interest rates. So that was one thing that I did remember. And that teacher was pretty cool. Diamonds deep. SCB, I wonder if Charlie Gasparino's wife owning a really bad streaming service. Oh yeah. To point it out, that streaming service is god awful. Just want to make that clear. In Norwalk has anything to do with his anti-ape attitude. Probably is. Is that in Connecticut?
Did
I
you see
usually
that?
drink Gatorade after a crazy night out, but might have to try Liquid IV. Chuck Lee, your life will be forever changed.
Hey, check the private chat.
Okay, cool.
The sharks are gonna be bloody this week. Be ready, apes. You guys rock. Oh, shout out to the great UG. Figment says I'm diamonds deep too. 100. There you go. There you go.
These are some of the best immature/mature conversation I've had. Thanks, guys. That's kind of what we do down here.
Yeah, this is a great mix of the power half hour of like a little bit of flagrancy and a little bit of info.
Yeah, yeah. That's that's kind of how I like it. It's like we're still on topic, but we just make funny comments.
I swear, I thought you just said that's how I like it. We're still on top, and I'm just like, oh, here we go. Here we go.
Guys, see, it's not even me. I just say things because I'm just like innocent, and then TMI just hops on and he's like, "Oh, you said this."
I mean, I think he actually did say on top. We should just take a show of hands to see what people think he said. AMC did 100. Oh, so you know, I didn't even answer that statement. Someone said they saw the conversation about 1,000,
Yeah,
and then it said before it was at 300. The only conversation around 300 was bots.
yeah. It was
And people
100
reacting
then
to
300. I
bots.
remember that day because they all came into your live stream and then they came into mine at night.
Yeah, it's nuts. And to me, it's like someone even referring to that as a number specifically is the proof that they were here.
Yeah. Your avocado's in the chat.
Oh, the avocado. Hey, man, shout out to the avocado. Won the competition. Didn't turn to guacamole. Shout out to you, man.
Yeah, they
You know what the
also
final
said I
question
would
was?
hook for Liquid IV.
The final question for the content was, which YouTuber does this sound? Ooh. everyone was just typing in Lou as fast as possible, and then he got it first, and it was
When was this?
this was during the live chat. It's during the live feed because it was two avocados. It was TMI's avocado, but there's two exact names, so we had a
Oh yeah,
competition,
I
and I had
remember
to
that.
ask them different questions, right? And it was like the best 2 out of 4, and the OG got it.
Oh, you see Gio's comment?
TMI is not showing himself because Rogue is laying down next to him. No. Rogue is bent over next to me. Now Rogue's gonna pop in after he hears that.
STV's ice cream cone. Yo, we're not messing around with that. Yeah, that's a timeout right there, Kip. My answer is hopefully not. I don't think so.
Yeah, listen. All I gotta say is this: nothing in comparison to what the hedge funds are gonna be facing.
Yeah.
Absolutely nothing.
Remember, I'm buying my noise canceling headphones.
Exactly. And I'm just gonna cut my ears off.
Beard of Doom. Good to see you in here.
Beard of Doom.
Also, guys, it is 10. That does wrap up the stream. Thank you to everybody that came in here today. Special thank you to all the people that were dropping supers, liking the video, and just coming in and hanging out. That was awesome. Also, if you guys want to follow me on Instagram, it is pinned to the top. If you guys follow me like right now within like the next 5 minutes, I will follow you back. Same thing with TMI, masked_investor. So you can also find him on YouTube, the Masked Investor, and then masked_investor on Twitter and Instagram and Twitch, right?
And Twitch. We everywhere.
All right, guys. I'll see you guys tomorrow. Also, TMI does that early live. So if you guys are morning people, go pop in over there. Night, guys.
Catch you guys tomorrow. Take care.